Appreciate you for hitting the like button. What a great Final Four we had out there, guys. Bro. What a great Final Four. I thought we had it, man. We were up by, I think, as much as 12 points at one time. And I thought we just about had it. I thought we had the game all wrapped up. But like Florida been doing all year, they finished strong. They finished real strong. And we seen that in the Final Four. Yeah. So I'm headed back. Headed back home. Had a great time out there in San Antonio. San Antonio was a good host. And ain't no complaints. If you ever in Texas, you gotta go to San Antonio. Especially over there at that Riverwalk. Let's see. I got about 2 hours and 45 minutes left on this ride, and I'm gonna do my best to stay live, the whole time. Beautiful day, 65 degrees in San Antonio. It's only 65 degrees. I know on the way here, I was having a whole lot of technical issues, bad connection. But hopefully this on the way back is a whole lot better. Appreciate y'all for tapping in, coming in, rocking with me. Appreciate you for hitting the like button. I'm on the way back home after a great weekend. Friday, Saturday, Sunday, and Monday was a great weekend. So, Martin, hey, what's up, Martin? How you doing? So what we got going on, we got to look out for the Houston Rockets next, guys. So we got the Houston Rockets coming up. I think they are second in the conference. So we got the Houston Rockets coming up next, guys. Appreciate y'all for rocking in, tapping in. Let me know what city you from. Where you from? I'm doing good. How about you? I'm doing pretty good. I'm just taking this ride back. I've been in San Antonio at the Final Four. Yo, what up? How you doing? I'm doing pretty good. Caton, I'm on this ride back from the Final Four. That's what I got going on right now. We, the team, University of Houston, we lost, but we played a good game last night. So we got a lot to be proud of. Those guys played. So appreciate y'all for rocking with me, tapping in. I'm just riding back home. I got about 2 hours and 45 minutes left on this ride. Oh, sad, but at least you are happy. Yeah, that's a good thing, Caden. I am happy. Yep, I'm happy. I had a great weekend in San Antonio. Down there at the Riverwalk. It's a beautiful place. San Antonio is a beautiful place. Especially that Riverwalk. Yeah, especially that Riverwalk. So where y'all tapping in with? Where y'all from? What state? What country? Where y'all from? I'm from Houston, Texas. Yeah, I'm from Houston, Texas. Do you want to hear a joke, Martin? Yeah, I want to hear a joke. Mexico. Shout out to Mexico. Yeah, I want to hear a joke. Give it to me. 167 miles left to go. Why are chickens so funny? I don't know. I don't know, Martin. Let me know why they so funny. Because what?
And promoting coal, maybe reducing other regulations around it. I wonder what type of appetite, what demand you're expecting on this, either for new mining of coal when it's in general been in decline for a while, but also
I'm waiting on the because what, Martin?
Build out seem to want clean forms of energy and
on the joke.
Necessarily wish to have coal powered learning large language models.
Well, let me push back on a couple things. Number one, coal's been growing.
Appreciate y'all for riding me on this road trip back home. Y'all in the car with me, kicking it with me, and I need the company. It makes the ride go by faster. Just because you know how chicken back in the morning. Like the emotion on the cold, but like they do some things and do not like their joke. Okay. Oh man, here go traffic. That's what I did not want. Just because you know how chickens like in the morning, like the emotion, only cold. But like they do something. Okay. How chickens be in the morning? How the emotions be in the morning? I don't know. I don't know how chickens be in the morning. Can't say because in the morning. Okay. I don't get that joke. I guess you went over my head with that joke. Chickens say because in the morning. Oh. You went over my head, Martin. Not good news about this traffic. I want it to be straight highway. I'm looking for this to be a straight ride. I-10 by 10 as we call it. You hit I-10 and you just go. I-10 by 10. Appreciate y'all for hitting that like button. For all the games for the Final Four. Hold on, guys. All right, I'm back, guys. Appreciate y'all for holding on for me. I had to take that call.
The market expectations is those sanctions would come off and Russia would be able to sell energy again to
Trying to figure out what's going on. Treasury yields higher.
In place. It's better economics. So I wonder if then that's a competitive.
Yeah, I'm in traffic, y'all.
U.S. selling gas if Russia's back in the market with Europe.
I'm in traffic.
Talk to European leaders. One thing they all share.
Now you tell us a joke.
That they bet their energy.
I don't know any jokes, Martin.
So I don't think there's a huge desire right now to, if the war's over, we're
I don't know any jokes.
For a dominant share of our energy supply. I think that's very unlikely to unfold.
And then what about Iran? Wanted to get you on the record on that one too, because there's an important meeting on Iran nuclear program coming up this weekend. First of all, what are your expectations as far as those sanctions that are in place? And is there a scenario where
the joke is I'm in all this traffic.
Those energy sanctions to limit their flow?
That's what it's a joke that I'm in traffic.
Absolutely.
I was looking for straight highway and I'm in traffic. Early.
Of course you can.
In the ride, not late.
Administration, Iranian exports of oil plummeted. Therefore, the money
that's the joke.
Terrorists shrunk dramatically, and Iran was was less of a troublemaker in our world. They were allowed, that sanctions didn't get removed, but they just stopped enforcing them during the Biden administration.
Man, I hope this don't last that long.
Their money from that revenue surge.
See, when I was on the way, they detoured, well, the navigation detoured us all the way through a whole nother little country town. But now the navigation is taking me straight I-10 by 10 because they're working on the roads over here.
That's the only way ever the world's going to sleep better at night. We cannot have.
But man, here we go, traffic.
Thank you for joining us on a myriad of topics, including that executive order on coal, which we'll look for later this afternoon. Chris Wright, U.S. Energy Secretary. Good to see you.
Thanks, Sarah.
Right, still to come, copper prices plunging double digits.
It's okay, you don't need to have to say one.
Well, it signals about a broader economic downturn.
Plus, watching the health insurers, they are jumping today after a bigger than expected increase in the government's reimbursement rates for Medicare Advantage plans in 2026. Things like
dang, all this traffic.
UNH, CVS, among the big ones.
Bro.
Back after a quick break.
See y'all, we in all this traffic.
After last month's massive
Sucks.
solar flare added a 25th hour to the day, businesses are wondering what should we do?
And company-wide power down.
Now we at a standstill.
Change the world of work. From HR to payroll, ADP designs for the next anything.
Life is rarely lived on the straight and narrow. Introducing the BF Goodrich G-Force V,
Which sucks.
our latest.
All this traffic. Man, we at a standstill, y'all. All right, now we're finally rolling a little bit. I could have took the route that I took coming here, but I'd rather do this. I'd rather just keep straight. Because that's the thing about San Antonio, is a straight shot to Houston. All you gotta do is get on I-10 and go. It's one way, I-10. I-10 straight to Houston. What I might do, guys, instead of going straight home, I think I'm gonna ride over there to the university, guys. University of Houston. I think I'm gonna ride through there. So to show support to the guys that played a great tournament, great Final Four. They just came up short last night. Do you know how do people call cows without legs? No. No, I don't know, Martin.
Checking my phone.
70.
Dang. See, that's the great thing about what I like about a navigation system. I can look and see what's causing the traffic, how long it's gonna be. But I don't really like, if I know where I'm going, I don't use the navigation system. Appreciate y'all for rocking with me, tapping in. We got 2 likes in the building. I wish we could get the likes up to 5. That'd be really, really cool. Hit the like button for me, y'all. That lets YouTube know that we are live and that we are taking this road trip back to the house. Shout out to Auburn University. Shout out to Florida Gators. Shout out to Duke Blue Devils. And shout out to the University of Houston. Bye. I need to leave and go to the store. Okay, thank you for dropping by, Martin. Hope you come back and tell me some more jokes. Make sure you hit the like button for me and subscribe to the channel so you'll be alerted when I go live. Maybe I'll have jokes prepared next time. Appreciate you for rocking with me though. All right, y'all, I think we got out of yeah, y'all, the stock market rallied big this morning, and right now as we speak, it's rallying. Oh shit. Beef.
How much more money is beyond the rally right at the open? It seems to be
That's a good one.
so we want to look for is the big move that we've had here already.
What do you call a cow with no legs? Ground beef. That was a good one.
And we are now almost 400 points higher. So
that was a good joke.
Bounce here, but it's quite noticeable. It's 400 points ago. It was only 7 or 8% ago. So the market's got to see.
I needed that laugh, Martin. Thank you.
Tariffs at this point here. So what is next here? Where do we go from here? Obviously, we're going to need some concrete improvement.
This is a beautiful day
we need to see most of all
in San Antonio, Texas, USA.
By a lack of visibility.
No clouds. What a great day. Beautiful day.
We have the potential here, if these tariffs get implemented in even partly the way they're being described, to have earnings, and that's going to create another pressure on the market. And then if we start talking about a lower economy or even a recession, you're going to talk about a bear market multiple, putting a lower multiple on the market. That's another pressure. So Sarah, that is the biggest threat to the rally right now, to try to get around these sustainable.
All right, here we go, guys. Man, we keep stopping.
Sarah, tomorrow,
jeez.
And of course, that's the biggest airline out there. We'll have to hear what they have to say about this.
Man, this traffic is terrible, bro.
I mean, the visibility is tough. I think that
right when I was thinking.
No, I mean, some of these, especially retail companies, don't.
Right when I was thinking we was
like 75%
straight highway, more traffic.
So for Delta, it's much more about the demand side, but yeah,
bro,
it's got to fly by instruments, not by sight.
Got 157 miles to go, guys.
Their vacations after the market plunge and everything else.
I think we're gonna stop by the university to support the guys.
Plans to fine migrants who defy deportation orders up to $998 per day. That's according to documents.
Then I gotta go run.
The fines stem from
I'll be back in a little bit and I'll go on. Okay, Martin. See you in a little bit.
The administration is also considering seizing the
Yeah, when I get back, guys, I think we're gonna ride through the university. And then I gotta go run.
ABC News, the Pentagon is considering a proposal to withdraw as many as 10,000 troops from Eastern Europe.
Well, if y'all don't know, I am training for a marathon. But I got a lot of walking, good rest days, right? A lot of walking I did this weekend. I walked. Yeah, I walked a lot. So we ready to rock and roll with the training. As soon as we get
to go live on the platform or change any settings without their parents' permission. Sarah, back to you.
Okay, thank you, Pippa. When we come back, the U.S. dollar first month since
I just need to get cereal, milk, chips.
market as tariffs take hold.
Okay, Martin.
Crypto Watch is sponsored by Crypto.com.
God. Guys, they got amazing food in San Antonio. I mean, it's good. And it's cheap too. Very, very inexpensive. Oh man.
NBC News mobile app. Get connected to your favorite news shows. For the top stories, breaking news, and live video. Download the NBC News mobile app now. Christy Welker hosts Meet the Press every Sunday on NBC. Listen to full episodes on US
It's starting to heat up, guys. 68 degrees.
Berlin is Phoenix from the ashes. Yeah, we are the new kid on the block.
At Babcock Ranch, we wanted to prove that a new town and the environment can work hand in hand. That intersection.
Yeah, my phone was overheating over there where I was at, y'all. That's what the problem was. I had to move my phone. So hopefully it stays right here. Think y'all can see a little bit better too. This traffic that I'm in. Phone glitching. Yeah, it overheated because I had it in the spot where the sun was hitting it, and it went dead.
2%. It is the best daily performance in more than a year now for the FTSE 100, for the French CAC.
Yeah, I had to move my phone.
The rebound even sharper for the Nikkei.
Because it was overheating on the other side over there. Hopefully right there will be good. I had to prop it up a certain type of way. All right. Yeah, we back, y'all. We back. Still in traffic as usual. Still in traffic.
Stocks, bonds, currencies. So we're on alert for all that stuff. And unfortunately, the way the Fed is positioned, only something like that would probably get them more involved in the near term.
Yes, and it would be easier, I think, than the rates, because rates, it's hard because there's inflation, but the liquidity measures.
Even at that, they would create some kind of liquidity program. But even at that, like if you're talking about what would create even a rate cut, it's not going to be, the next 3-4 weeks of economic data. That's
right. No, that won't be very definitive for them in the slightest. Anyway, watch for this devaluation, which is happening. So what can we expect overall from the U.S. dollar and the currency market as investors adjust to the new trade landscape? Joining us now is TD Securities Global Head of Foreign Exchange and Emerging Market Strategy, Mark McCormick. Mark, everybody was wrong. Everybody thought that the tariffs would lead to a stronger U.S. dollar. Everybody thought that market panic would lead to a stronger U.S. dollar. So what's really happening?
I think one of the most interesting points is everyone was pre-positioned 6 months over the next year. And the other thing that's very, very critical to think about is these are all the value trades in markets. So when people talk about value in equities, there's also value in currencies. And all the undervalued currencies are the countries that have been saving and running very low interest rates over the last 5 to 10 years.
So talk about the significance of what we were just talking about with the Chinese devaluation, the fact that they are letting that go into deeper levels.
I think that's a really important piece because I think it's a market myth that the policymakers in China are going to let the currency depreciate. It goes against everything that they're doing. One of the things that's happened behind the scenes since U.S. sanctioned Russia in 2022 is that emerging markets are trading more with emerging markets. Essentially, commodities is basically being traded outside of U.S. dollars. India is settling
155 miles to go, guys.
With gold. So essentially what's happening behind the scenes here is they want to internationalize the renminbi more.
At this pace, it's going to take forever.
Weaken to offset the shock of the tariffs is not the right strategy if that is your goal. And I think another piece of it is by letting the currency depreciate too much, it does hamper local confidence. So a big piece of this is I think what they're trying to do is use the currency in a measured way, but project some level of confidence around the currency strengthening. And the other side of this is also trying to think about the international capital flows and the development.
Great, beautiful view.
In other countries and trying becoming a net creditor, which are all reasons why you'd want to limit currency.
San Antonio, nothing but hills and mountains.
This is a proper structure of how you build out a reserve currency over the next 5 to 10 years.
Was that a wreck?
Mark, that sounds pretty strategic on China's part. I mean, are there
No.
unanticipated consequences? Are there knock-on effects that you'd be looking for near term in terms of market disruption at this point?
Well, I think a part of it is, right, you have to think about the...
Man, there's a lot of trap. Oh, bro, he tripped out.
So there is going to be, you have to pull on multiple levers. You're going to have to use monetary policy.
Nah, I can't do that.
But I think the number
there's a wreck or something up here.
Big surprise to markets over the last couple of months is every country, rather than just kind of, again, focusing on tit-for-tat retaliation, fiscal stimulus is at the core.
We're going down the hill. Can y'all tell, guys?
What China's going to do is, yes, they'll probably
going down the hill. Look how it look on the screen.
Move against China, the currency would weaken a little bit.
Steep downhill.
I've been expecting a move over 740, 750. And again, what you do is the transition is from going from monetary support.
Going downhill, guys.
And normally, typically for currencies, especially for a country trying to inject liquidity into the system to try to boost their local
going down the hill.
Those local equity market attractions are also good for capital flows along with fiscal stimulus. So the one thing the FX market loves to reward is the equity market momentum and also relative growth expectations. And I think that's the playbook.
San Antonio has a lot of hills.
The playbook is to use fiscal stimulus to boost domestic.
A lot of open land.
That a lot of the growth that China's suffered in terms of
with nothing but hills. We're going down the hill right now.
Housing market.
So really quickly, 20 seconds or less. So the next big move, not forget China, but overall for
look how it looks. It looks like you're going straight down.
The move in the very, very short
like a
term,
roller coaster.
Higher. Euro and renminbi have broken apart. Euro should probably be 104, 105. But if we start talking about FX beyond the short term, there's going to be a big depreciation in the dollar based on the conditions that we're seeing now. Again, our biggest call here is the FX market over quarters is going to rotate to value. And value is seen in lower yielding currencies. Those countries will be using their savings to spend, and that'll suck in capital. So I'd say short term, dollar on positioning, it's a buy. Longer term, you want to use those basically rallies to sell.
Okay, thank you, Mark. Appreciate it. All that color. Mark McCormack from TD Securities.
All right, up next, a number of AI names rebounding as part of this morning's rally, but is it a dead cat bounce? We will discuss that.
Yeah, it looks like everything is recovering this morning, guys. That's why if y'all caught some of them bounces, bro, that I was talking about last week, when some of these great companies like Nvidia, Walmart, Tesla, when they was down like that, if you got in at the bottom down there, you up really, really well. You up real good. If you bought way down there, as far as Nvidia as an example, if you picked up shares at 94, you're doing really well right now. You're up $10 a share. Because we up, Nvidia is almost a 103, 104 right now. So if you caught that dip at 94 on that tariff news, you sitting good right now. You could have bought some shares down there at the 94 area. At the 94 area, held them for 3-4 days, and sold right about now. That would have been a good strategy. Going down this big hill. The only thing is we got all this traffic, which sucks. Let me see how long we got left before we make it. Because I think I've been on the road well over an hour. Resume. We still got a ways to go, guys.
Tech stocks bouncing today, outperforming the broad indexes, though off session highs. All the
152 miles away. Now we're going
Nvidia up more than 5%. Deirdre Bosa has more on today's Tech Check.
uphill.
Hey, Mike, so the AI trade in particular, that's rebounding.
We just came down one hill
Broadcom, Palantir, Marvel,
and going up another one.
Surging, outperforming the broader tech complex. They have been among the most beaten down amid looming tariffs, immune to any positive signals over the last few days or last week or so. Today, though, making up for some of that ground, in part because the threat of tariffs hasn't moved CapEx or AI infrastructure plans in a material way just yet. And for businesses that are integrating AI, still seen as non-negotiable.
We got 2 hours.
Now, Meta reportedly planning a nearly $1 billion
and 20 minutes left.
In Wisconsin. There's Nvidia partner Honhai sales rising nearly 25%.
But if we didn't have this traffic, I'm about 20 minutes behind right now.
First quarter on resilient AI server demand. Tomorrow, we're going to hear from Google's cloud chief on its plans at an event, but we do already know that the company is planning to distribute its AI more widely, and so they need more compute to do it.
Estimated time of arrival
Shopify CEO
was
making the rounds in technical systems.
12:45.
Reflexive AI, a baseline expectation, essentially a new standard operating layer.
The estimated time of arrival.
Startup founders, venture investors, Microsoft, OpenAI executives, all echoing the same.
With all this traffic, man.
AI or fall behind. Underscoring this idea that the strategic value of AI, it's too high for it to be abandoned or scaled back because of tariffs.
Trying to see what is going on.
Everyone can be on board to implement AI and build the data centers to power it, but tariffs, they may still represent a wrench in those plans, and there is also signs of pressure. The information.
Appreciate you hitting the like button.
Is rushing to finish a massive data center for OpenAI before tariffs make the servers and other materials a lot more expensive. So, guys, the question, it's not over demand. It never really was. It's oversupply, even more so given the tariffs. How fast, how flexibly, and at what price. Long-term thesis, that may be.
We got to be behind.
Volatility very much still in play. And as you said,
something that's keeping us
come off their session highs.
Moving this slow.
And it's not like, I mean, all these creators on the forefront of building out AI, Elon Musk, Mark Zuckerberg, Bezos, like they all have the president's ear, and they have a good relationship with him. So I do wonder.
I don't want to take that much of a time.
Strategic benefit to China here.
I'm already 20 minutes behind.
That's been one of the main,
on all this traffic
points from the administration. It's been bipartisan too. America needs to lead, needs to be dominant in AI, but now sort of the compute power that we need for that to happen, all the data centers, a lot of questions swirling given the tariffs. Okay, thank you, Deirdre. Still ahead. Falling copper prices mean for the global economy?
I'm already 20 minutes behind because of this traffic.
Take a closer look at the impact.
I've been traffic this whole time. Moving just like this.
Bravo's hit series, The
the valley's full of surprises. The sun's out.
Never knows how small your nipples are.
And so are the claws.
You're exhausting. You give Karen energy. I'm done with it.
So catch up with friends.
I'm a great father. Terrible husband.
Yeah. As suburbia turns scandalous.
I just want you to be there for me. That's all I want, Kristen.
Is there any rumors of him cheating?
You need to go get help.
Nobody wins in these situations. Nobody wins.
Apocalypse is here.
The new season of The Valley premieres April 15th on Bravo.
I played for the NFL, and it truly taught me about discipline, dedication, and courage. I wanted to be a real estate developer. So a lot of people say, well, how does that work? How can you be an environmentalist and also be a developer? Ambition is the passion to get something done. At Babcock Ranch, we wanted to prove that
In the hills of San Antonio.
hand in hand.
Beautiful, beautiful
100%
sight.
Babcock Ranch is powered by solar energy.
Beautiful, beautiful sight. Appreciate y'all for taking this ride with me. Even it's a slow ride right now because of all this traffic, slow traffic. We are going 30 miles per hour in a 75. Supposed to be halfway to Houston right now. Man. Yeah, we're going slow. I think it's some equipment being pulled up there. A wide equipment or something that's being pulled. Oh, here we go, stopping again. And I don't know if you could tell or not, if y'all could tell, but we are going up another hill. Going up another hill.
Richard, it's great to have you here. So many cross currents that affect your business. Obviously, there's for a while the idea that maybe domestic copper prices would be higher because of tariffs and being protected, and then now we have the tariff effect on global growth expectations as well as you have production overseas. How does this all play through your business?
So, Mike, I'm in Santiago, Chile right now at an annual gathering of the global copper industry. We have more than 2,000 people here, and everyone's shocked, concerned, uncertain about the direction where these tariffs are going. The price of copper, and copper is a very...
Now we're about to go down the hill.
For our economy and for the United States.
It's up,
the price is
down,
global demand
up,
and supply.
down.
The outlook for demand is
now we're heading down the hill.
Because of the
mountain, whatever you want to call it.
World's economy, and there are numerous barriers to developing supply. So we're facing a looming deficit. The U.S. consumes less than 10% of the world's copper. China consumes more than 50%. So demand in China is a driving force on prices. And we are the dominant producer in the U.S. We produce more than 70% of the copper here. But our mines are older, they're lower grades. We have great expansion opportunities, but it's dependent on a reasonable global price.
Okay, I think we done, guys.
Well,
That's what it was.
The countries where you do.
That's what the traffic was right there.
Produced, obviously, outside the U.S., the majority of it. So are you making this case, you and your colleagues?
That was blocking the road, the work truck.
In any way about,
good. We're on the move now.
Yes, there's a proceeding going on now that's looking at applying tariffs to copper. And we have...
Now we're going... Oh, shit.
On that effect.
I spoke too soon.
Predominant U.S. producer. If tariffs are placed on copper coming into the U.S., and the U.S. imports about as half of the copper needs. As a company, we produce over 70% of what's produced.
Hey, Martin, you back?
We could have some near-term benefits for our company, but
I spoke too soon. Back in traffic.
There should be policies for our industry that support.
I don't know if y'all can see those.
There's a lot of things.
Those trucks.
Talking about AI.
That's why we are in traffic.
The need for that. There's lots of reasons for copper demand to grow, and we're just urging.
That's why oversized load.
These barriers to let that demand emerge.
Bro.
What about impact of copper being designated a critical mineral?
Well, it definitely is a
critical
mineral, and it would be beneficial and appropriate for that to be reflected in the U.S. government's policies. It is something that is just needed for the economy.
Man, right back in traffic.
Spread. But, you know, as I've pointed out, the growing electrification of the world requires more copper. 2/3 of copper goes into electricity generation and use.
What a bad time.
So if I were to summarize your views, Richard, overall on the tariffs, it's short-term benefit to get copper tariffs for you as a domestic producer, but long-term, medium-term, you're more worried about the economic fallout on China and everybody else and what that's doing to copper. Is that right?
Exactly. The issue is the price of copper will be set by global supply and demand, and we are encouraging the government to promote policies to continue the growth that we've experienced.
All right, Richard, really good to get your take, especially from business leaders who are on the front lines here dealing with these tariffs. Thank you very much. Good to see you.
All right. Great to be with you.
Richard Ackerson, who's the former CEO, is the chairman of Freeport-McMoRan.
Yeah, kind of like right at the frontier of all the interplay of the tariffs and the economies. Meanwhile, we got a 2.4% gain in the S&P 500, definitely off the highs. We're up about 3.7, 3.8%. Any rally faces a pretty high burden of proof. We'll see where it goes.
All right, that's going to do it for us here on Money Movers. Over to Scott Wapner in the halftime report.
All right, Sarah, thanks so much. Welcome to the halftime report. I'm Scott Wapner, front and center this hour. The rebound in stocks, S&P looking for its first positive day in 4. We'll discuss and debate these markets with the investment committee today. And joining me for the hour, Josh Brown, Jenny Harrington, Carrie Firestone, and Jason Snipe. We will show you the markets here. Yep, we have a good day going. We are off the best levels. Yields are up again today, something to keep an eye on. We had the worst sell-off in treasuries in some 2 years yesterday. Josh, let's just sort of set kind of the mood of where we are. Obviously, we're looking better. We're still really uncertain on where things are. We know that a lot of damage has already been done by the administration's handling of all this, the way it was all done to the markets, to portfolios, to the economy. Larry Fink says yesterday CEOs are telling him they think we're already in a recession. Goldman Sachs today says we're in a event-driven bear market triggered by the tariffs, a point you made before all of this mess in the market happened, that we were already in a bear market. Because if you looked at all these stocks, you had hundreds of stocks that were down more than 20%. And, you know, it still doesn't feel like this market is on any level of solid ground by any stretch.
Yeah, and what actually the end of that golden quote was that we're in an event-driven bear market that could tip into a cyclical bear market, meaning something that's driven more by the economy than just the shock.
It looks like these trucks are the reason why we was in traffic.
if I were talking to my friend Caleb Silver, who runs Investopedia, I would say, Caleb, put today's bounce into the entry of classic.
Oh no, that's not the reason.
What you have today. 29 of 30 Dow Jones stocks are advancing. 88% of the S&P 500. 94% of the FTSE 10 is up. 86% of the stocks, and 98% of the Nikkei. So it's around the world. You've got this bear market bounce
this is the reason. Yeah.
Started overseas, continuing here. When you look at the level of technical damage done, though, I think you have to conclude, hey,
they're still moving.
We need to exhale. We need to take a little bit of a breath. Not every day.
Yeah, that's the reason.
1,700 points in the Dow. But what happens after today?
These work trucks.
Change, because if
those work trucks.
Into a recession, and if
that's the reason why.
CEO thinks there's a recession. Well,
we ready to rock and roll now. Yeah, there goes security.
At the end of the week.
Okay, now we ready to go.
Maybe not from the banks, but everywhere else.
As we go up another hill, guys.
Never good. I've never seen it be the bottom when they pull out.
Now I think we ready to rock.
The second thing, and this is more important, everybody understands this. If it's a recession, earnings typically fall 20 to 30%. That's not in anyone's estimates. Even with all of the fear of the last couple of days, that's not where estimates have come down to yet.
That was a long hour.
Multiple on the market still 18, not 17.
Now we ready to ride.
15. So I worry you're going to get the earnings guidance yanked, followed by weak earnings next quarter. Not catastrophic, but weak. Plus you have multiple contraction. And none of this is over. It's continuing. It's going to be every single day. I had a beautiful call with this one.
Basically a 30-minute delay.
And not helping us. And it's just going to be this constant in the headlines. So that's where I think we are. And if you were hurting last week, if you hadn't done anything defensive, or you looked at your portfolio and you were way too aggressive going into this, this is the type of day that offers you an opportunity to make the necessary changes. And you don't have to sell down 7%.
Y'all seen that bird?
Whatever's killing you. So I think that's the way rational investors should think about this, and not anything more.
Kerry, Mike Santoli made the point last hour at the very end there that the burden of proof is still high on this market.
He dropped down, picked up something.
Used this opportunity at Josh's point.
Shot right back up in the sky. Kind of like that movie.
You have this escalated.
I can't think of the name of Jeepers Creepers. Yeah,
the U.S. and China.
That's what he did.
Going to fight to the end.
But on the way of him coming up,
this morning talking about
he almost hit me. That big ass bird.
Eunice, you made a great point earlier on this network that the leverage between the two countries
might have been an eagle, or a vulture, or something like that, but it was huge.
The fact of the matter is that
and it came out of the sky, and it dropped down and picked up something out of the ground over there, and then Jeepers Creepers style.
Josh has talked about that too.
That's just harder than feel, Judge.
In terms of social media.
Did you see that bird?
Right, the burden of proof is still on this market. We have a low bar for upside surprise at this point because we've done so much damage. BlackRock today.
All right, here we go.
Downgrades U.S. stocks to neutral from overweight.
Ready to rock and roll.
Way out long term, but in the near term, because they're not naive to what the environment now looks like.
Right. So they're worried, and let's be honest, strategists at Wall Street firms generally are late or wrong. But I would say the following: a market is not homogenous, and we can talk about how this market has not hit a low.
Now we're going downhill.
But we have thousands of stocks, and some of those stocks have gone down 50%. They may have gone down more than 50%. I have a list. I won't hold it up. It's a big list of stocks that are down 30% that we've been watching.
On your shopping list?
Yeah, on the shopping list.
And you don't feel confident enough, like right now?
For some we do. No, for some we do. And I know we'll talk about that. And I think it depends. It's not as if we're saying, oh gosh, the market's down 20%, bear territory, but now we're going to buy. I mean, that's naive to think that this is the end. We don't have any ideas, Josh, that what is going to happen later today, never mind tomorrow. So let's be careful. But if there have been names that you've been watching and you feel this is a compelling company, this is the job that we do as professionals, this is something that we want to own, we're starting to buy some of those names.
Let's do it right now. I was going to hold off for a minute, but because you're making this point
So
Y'all hear that giving the game up? Let me turn this up.
Caps have gotten obviously crushed, even more so in all of this. Amazon's 28% off of its high.
Right.
You do have some target cuts
Listen,
today, by the way,
guys.
for Amazon and some of these other names, but tell me more about this.
Yeah, well, so if tariffs are the big issue, and we understand that if you're selling multiple items, every single one of them is going to face a tariff. But for Amazon, they make their money by the dollar amount that they sell. And that dollar amount may not change, it can continue to go up. It's a different mathematical strategy on how they earn their profits. And so 28% down, and we think that they will make the numbers. They will continue to gain market share. And yes, tariffs will hurt. Some of these are unsustainable, or they will move the source of production. But this to us was an opportunity, and the price at which we felt it was an attractive buy.
Josh, what do you think of that real quick?
I like it. I bought some Amazon on Friday. I called in and told you guys, anytime that name is in a 30% drawdown and there's no real fundamental problem with what he's doing, it's more of a macro issue. That's what I think you say to you need for this price. I just need to feel confident that this is a good price, and regardless of how long it takes, I will be justified in having added to it. It's a core position. What I'm not doing is saying, this is it, I'm buying it, market's going to rally.
No.
What is it up today? 900 points on Monday, and I'm going to get out. That's not what I'm doing there.
Right.
Target did get cut to 220 from 270. Overweight still, though, Jay, at JPM. These stocks have come down a lot. And you know, you got to believe that at some point people are going to think enough is enough, at least tactically.
100% and 30% off the 52-week, I don't think is a significant number. To Josh's point, nothing's really wrong with the business. And, you know, the other thing I always focus on is AWS is the largest cloud player in the business, and they have been accelerating growth over the last couple of quarters. So I continue to like that. And also, operational margins have continued to grow over the last few quarters. So I think their business is really in a solid place.
Jenny, let me ask you this. Do we think that the growing number of influential people within the investing world speaking out is going to have now a real and changing impact? Because, you know, we talked about so many of the people yesterday. You can add Ken Langone to the list as well. He called the number in terms of the percentage of import duties put on Vietnam BS. I don't understand the formula, he said. I believe the president's been poorly advised by his advisors with this situation and the formula they're applying. Ray Dalio today at CNBC, I agree with the problem. I'm concerned about the solution. And now Ken Griffin speaking out as well. He pointed to the fact that you're going to see prices go up for all sorts of products. Bad for the middle class. Even if it's, quote now, even if the dream of jobs coming back to America plays out, that's a 20-year dream. It's not 20 weeks. It's not 2 years. It is decades. And we'll get to the whole Musk-Navarro battle in a minute. But the idea that if you believe that these influential voices are actually having influence on the president and his team here, what that might mean for the market being more durable in terms of a comeback.
So I think the interesting thing here is influential for the president, magnaphone for what everyone's saying and thinking, right? They're not influencing how investors think. They're not influencing how the American public thinks. They're speaking up on their behalf, and everyone's mad. And so the administration, and my guess is all the Republicans in Congress are listening to this. And you know what's going to happen a year from now? We're going to be really getting close to midterms. And if we're in this same position in midterms, the Republicans will be hearing this, and it'll be amplified even further. And they're going to say, hey, we are at risk of losing the House and the Senate, and they need to maintain that. So I think they need to get this ugly market, these horrible feelings that a lot of people are having. And I need to say, like, not everyone's having horrible feelings. I sent out tariffs, and I've always told you I have a very mixed client base. like, yeah, this is horrible. And a lot of people are like, hey, I'm great with this. You know, I'm paying for long-term gain. So there is a mixed perspective out there. But if the market's still down 20%, if we're in a bear market, a cyclical bear market, a tactical bear market, whatever it is, you don't win re-election as an incumbent when you're in a cyclical bear, when you're in a bear market. So sometime between now and this time next year, if the Republicans want to keep control of the House and Senate, the administration is going to need to clean this up and get the market to a lot higher levels.
Sooner, I think.
I think sooner, because this is a really important point. Every day that passes, more and more damage is done.
Well, more and more damage is done to, retirement portfolios. More and more damage is done to stocks, and CEOs like Elon Musk get tired of looking at his stock get destroyed in the market because now you have this brawl, if you will, at least verbally, obviously, between Mr. Musk and Peter Navarro. The Washington Post, by the way, says that Musk made direct appeals to Trump over the weekend to reverse the sweeping tariffs. Obviously, it's getting spicy. You probably have heard about it to this point, but let's remind you with some actual video and sound. Watch.
We all understand in the White House, and the American people understand, that Elon's a car manufacturer, but he's not a car manufacturer. He's a car assembler.
That was on this network, and the response by Musk, he didn't take too kindly to that comment, because he took to his social media platform, the one he owns, called X, and he responded. I think we have these made up for you, where Musk says, Navarro, you can read it for yourself, Navarro, truly a moron. What he says here is demonstrably false. He went on to say that Navarro is dumber than a sack of bricks, just on social media.
Oh my God!
From Musk about Navarro.
Look, I'm not known to come on here and constantly praise Elon Musk, but this is a man who has built a global business, a multinational business. A lot of people have had issues with how he did it, but suffice it to say, he made himself the wealthiest man in the world, and he didn't inherit it, he built it. And to have somebody who effectively was plucked from obscurity because Jared Kushner did an Amazon search to find a China hawk economist, say that this guy doesn't assemble cars or this guy doesn't know what he's talking about. I mean, it's almost obvious which side most business people would fall on if they had to agree with one side and be against the other. I think there's room to say that the longer the market turmoil goes on, the more of a rift there's going to be between actual business people and theorists. And the actual business people will ultimately win out because it's their actions, the way they run their business, the way they pull back CapEx, the way they are forced to lay off employees. That's the side that will eventually get the attention of Congress, to Jenny's point, and hopefully get the attention of the White House. It just might be a while. These things don't operate necessarily as quickly as we would like them to.
You're forcing companies, obviously, to make critical decisions that just can't be made in a minute.
But what ends up happening is paralysis. So when I talk about I'm worried about the earnings picture, and I'm telling you what I think is about to happen in this earnings season is pulled guidance. Of course they should pull guidance. How could you possibly, with a straight face, talk to 45 sell-side analysts on a call and give them any idea of what's going to happen? Now, you can do worst case, middle of the road case, best case. Maybe that's a helpful exercise. But in the end, there is no possible way that you can have any kind of confidence in what the rest of this year is going to look like in, let's call it, 9 out of 11 S&P sectors. So I think that that's going to be the theme of this earnings season. And I do think this will ultimately get the attention of politicians because it's their constituents who are working at these companies or who own small businesses that cater to these companies. And it's not theoretical. It's not a Twitter debate. It's literally better the longer that the rhetoric continues this way.
You've got CEOs scrambling to figure out what to do in the months ahead when it comes to supply chains and the like. Apple, according to the Wall Street Journal, planning to source more iPhones from India as a tariff fix. Jason, Apple's lost nearly $640 billion in market cap. Now, this was before today. $640 billion in market cap over the past 3 days alone. That loss in and of itself is bigger than the market caps of 489 S&P 500 companies.
Yeah.
489 of 500 S&P companies.
Yeah, no, it's been a bloodbath, obviously, with Apple. 90% of their assembly is done in China, right? So they're widely exposed to the tariff conversation and what's happening. 30% off the 52-week high, just like Amazon. Down 26% year to date. And then you hear the news today is obviously they're starting to move some of those iPhones here to the U.S. 200,000 plus phones. You know, that's a microcosm of the type of business that they do. So for me, I start to look at, you know, not necessarily the Trump look, but if he is able to wave a victory flag on any level, these are the companies that benefit tremendously. There's not a huge hurdle for them to jump over if there is some victory flag wave. So that's why I continue to stay market weight here, and I'm opportunistic on this stock.
Yeah, it reiterated underweight. Apple was today at KeyBank. Goldman still has a buy on it, though they do cut the price target. Now you've got a stock, Josh, trading at 184 thereabout. You know, now you got price targets around $240. The ones that are even positive, like Goldman, which says buy it, but we're cutting the price target by $50. You still got a long way up.
This stock is going to get used. So in prior bear markets that aren't caused by trade tensions, like this thing acts really defensively, and it tends to act really well. And unfortunately, I don't think it can in this particular environment. And I'm telling you this as a shareholder and somebody who doesn't plan to abandon his position and soon. But I have to be very honest. I think they're going to use this stock in the public markets as kind of like a call option on the degree to which the trade war is going poorly that day or well. It's a gambit between, you know, like between China and the United States. So like every time there's negative rhetoric coming from China, this is going to be one of the epicenter stocks. And it kind of reminds me of the casino names. The last time we had like a tariff war with China, the way that Wynn used to trade, and MGM and all these companies that had so much susceptibility to Chinese authorities. I think that's probably overstated in the case of Apple, but this is where they make their phones. This is where it's their second biggest market to sell into, and a really big difference now versus last time is the Chinese phone manufacturers that Apple compete with were nowhere near as powerful as they are today. So it's a really tough situation. I went into this year saying I don't think this is going to be one of the best performing names, and I'm sticking with that call. This is just not where I want to be in this moment. It's just too much headline risk.
Pretty big moves today, Kerry, in the semis. Got Micron up. We mentioned the nice 4% bounce in NVIDIA. You know, the semis, there is belief in some quarters that you're first in, so maybe you're coming first out. Remember, they were getting pretty beat up, whereas software, semis are coming out. I lead Applied Materials. Is that new or an addition? Okay, why this one?
That's new. So we've been watching that for years. This is a name that many years ago we owned in my life at Fidelity, owned lots of AMAT and all of the other semiconductor companies. 47% down, 50% down roughly. And it's selling for 15 times earnings. It was selling for 25 times earnings. And there's also a short squeeze going on with all of the semis and these capital equipment companies because they've been pounded and pounded for months now. So they are primed to have a big reversal. But that's not why we bought it. We bought it because it hit our target, and not only are in everything now we and AMAT, it has basic monopoly in a lot of the products that they sell. But if you think about data centers and how AI needs more chips and needs more production of chips, that also is a big positive for them.
The president and CEO of Applied Materials just stepped in and bought almost $7 million worth of stock. It's his first insider purchase in 10 years.
Yeah, so there you go.
Can I say something on this too? So I think it's so interesting the way Kerry laid it out, because we used to own AMAT a while ago too. We sold it when it was at a stretched valuation, as you know better than anyone, this thing's traded at 14, 15 times forever. Like, that's the multiple. And when Carrie said before, the market's not homogenous. This is where you have to have that price target of where you'd buy well in advance. You can't in the moment say, oh, I need to start looking at AMAT. If you have that price target and you say, okay, the market's down 20% from its high, AMAT's down, I don't know, what was it, 50% or something? Then if you're poised and ready to go, when this crazy thing gets down back to its historic multiple, you're actually ready to buy it, and you can pounce with confidence versus freezing in your tracks.
I think I just want to point out too.
But we might buy it too, by the way.
You know, the market move today. 21 and a half minutes into our show is interesting. It just goes to the lack of power behind this move as strong as it looks on your screen. Remember, why don't you guys show an intraday of either the S&P or the Dow, which will probably give a similar sort of look into how the session has played out. Looks to me like we're almost at the lows of the session.
I think it's the earnings thing, Judge.
It's the earnings, and you know what? The Fed is in a really, really tough spot here. Austin Goolsbee from Chicago, the Fed president there, is speaking on public radio in which he has said that tariffs are a negative supply shock. The response is unclear. That the tariffs are way bigger than anticipated, really echoing what I think everybody, at least outside of the White House, was expecting.
By the way, the timing, like, all right, so let's say you want to go against consensus, right? The reciprocal tariffs go on at midnight tonight. So we wake up tomorrow in a new world, effectively. You want to go against consensus, you don't think they'll actually do it? You think they'll pull back at the last minute? You want to play chicken with Donald Trump?
You know what? I kind of would play chicken.
You should do it.
I grew up
Buy
in a
Apple.
household.
That's...
Yeah, no, I mean, I did. Okay, I'll tell you what I did. On Monday, I put a ton of money to work for portfolios where they'd come in, they were new, and they were sitting on cash. And it is a little bit of a
good time. Good idea.
Yeah.
What did you do? Where?
I just put the portfolio to work, right? So whenever clients come in, I tell them, look, it's going to take me 3 to 6 months to get invested. If the market's terrible, it'll be faster because I'll pounce on the prices when they're low. If the market's great, it'll be longer. But I grew up in a household where I was threatened constantly, right? Like, I breathed wrong and I was threatened. I would say...
That explains so much.
I know. Look, I'm going to get into my family. 3 brothers, wild and crazy dad. It explains a lot. But constant threats. Of those threats, I'm going to bet you less than 2% were ever made good on.
I go
so
back.
You think, Sweetie, you think there's a high probability that these tariffs, the reciprocal tariffs specifically, do not go on at midnight tonight?
I think there's a high probability that it's not quite as bad some way or another than we're all expecting.
I go back, though, to where I started 23 and a half minutes ago, that to many people, the damage has already been done.
Yes, and to the small businesses. Not just portfolios, but the underlying businesses.
What was it? Well, we were talking like $10 trillion worth of value wiped out of this market.
We don't even know what the shocks are.
Of the year.
The reverberations, we don't even fully understand American brands selling anything overseas. We don't even fully understand, remember what Kid Rock was able to do to Bud Light last summer? It wasn't that long ago. We don't even know. So that's number one. Think of Disney. Think of Apple. Think of Nike. We have no idea. So that's maybe it goes away. That would be great. I'm certainly not rooting for what I'm describing. We also don't understand what the shockwaves mean to the U.S. Treasury market beyond 24 hours. Saw some huge selling yesterday.
Yes, I said what did I say? The largest in a number of years.
The dollar.
Selling.
You have no idea what this is. Like it's almost like the bomb went off and then all right, we have no idea now what the second order, the third order effects, and maybe they're not as bad as some of the worst case scenarios. That's certainly what I would hope for, but how can we know?
I think they're pretty bad.
So we got to keep a close eye on things. As obviously the markets remain volatile. Nothing like what we witnessed yesterday with the massive swing, almost unprecedented move midday we had there. Let's get to one more stock, just because it's owned on the desk and it is in the news and it is on the move. It is United Health. You have the Medicare payment rates exceeding expectations, so that stock, with the others in that space, have been up. Jason, you take it first. You have a full position. Carrie, you have a big position there too. What do you guys think? Jason first.
Yeah, no, I think it's huge because I'm thinking about the reimbursement rates were expected to be 2%, and we've got 5% reimbursement rates, so that's significant. significant. Their earnings have been solid here. Obviously, it's positive on the year, and I think this has been, I almost liken it to what happened with Social Security through COVID. Inflationary costs for medical costs are going up, and they're trying to right size what the reimbursement rate should be. And I think this is a signal to the market that the administration is supporting managed care businesses.
Yeah. Well, I would say that UNH went through its own ultra bear market last year. I mean, you haven't seen a stock collapse that's a defensive stock the way this did, unless it's a real catastrophe. And it's been climbing back for the last few months. It's a stock that sells for 14 times next year's earnings. The earnings are coming through. Now you got an additional positive. So I think it's just perfect storm on the upside for UNH tonight.
All right, let's do this. Let's squeeze in a break if we could. We do have more committee moves to get to as well. We do have more trades on the banks as well. Earnings are coming up fast. We have a move in the financial space too to tell you about. Back in 2.
I told myself I was okay with my moderate to severe rheumatoid arthritis symptoms.
With my psoriatic arthritis symptoms. But just okay isn't okay.
And I was...
We finally on the move, guys. Got a good stretch going. How y'all doing out there, man? How y'all doing? Appreciate y'all for riding with me. Hit the like button. Hit that like button for me. Let me know where you from. Did you watch the NCAA tournament this weekend? Did you watch the Final Four? Let me know, y'all. Y'all just riding with me on this road trip back home. Of course, I'm coming from the Final Four. On the way back home. They just gave us a lot of information on that little segment we was listening to about investing in the stock market and what companies that most people are trying to invest in. They are buying, guys. They are buying. Especially, the great news is if the people that are new, that's just starting to make their first investment, they're in a great position. Why? Because there's a crash going on right now. You don't want to buy at the highs. You want to buy at the lows. The market is on wholesale. The stock market is on a wholesale right now. So if you knew, never invested before, this is the right time to start investing with the companies that you know, like, and trust. With the idea that you holding this long term.
With exclusive access to market-moving interviews and...
Because guess what? We had a low, as an example, on NVIDIA, $94. I think it went down as low as almost 90. The last time I looked, it was at 103. Just like that, it jumped $10. So, if you got in at the low 90s, congratulations. That's what I'm about to do right now. I'm gonna look and see where it's at right now. That particular company I'm talking about is NVIDIA. Well, it dumped down, it's down to 101 now. 101, 102. It got as low as $86, bro. NVIDIA got as low as $86. And it's back over 101 in a couple of days. NVIDIA got as low as $86 for one share. And it has bounced from 86 to 101. I gotta speed up now. Cancel. I had it on cruise control. control. I gotta pass up these trucks right here. I had it on cruise control, guys. I was just cruising. Now I gotta pass these trucks up. Appreciate y'all for rocking with me. Listening to the game on here. They're giving a lot of knowledge. I'm finna cut it back on.
I understand that, but again, you look at stock by stock, and there are opportunities that we felt at these prices. It's not as if we added 4%.
Oh, sure. No, I hear you. I hear you. And I know how you invest. You're not looking for some dramatic outcome next week.
Correct.
I got you.
Can I just throw an interesting stat on that? So I heard last night from JP Morgan, they said for the low-end consumer, 98% of their disposable income is spent. For the high-end consumer, 13% is spent. So even if there's massive destruction in their portfolios, that 13% is so little.
Did y'all hear what she just said? The low-end earners, the people that make money but on the lower end, they spend 98% of their income. The people that are on the high-end earners spend only 13% of their income. That's what I talk about all the time on here, guys. Earn, spend less, spend less, spend less. Make investments. The top 2-3%, guys, only spending 13% of their income. Well, the low-end spenders are spending 98% of their income. I'm glad I got this on video. I'm gonna make a reaction video to this when I get home. The power of earn, spend less, and invest. Guys, everybody is screaming. Everybody, the stock market going down. America is, the American dream is over with. Listen to this, guys, to what they are saying. Wow, the lower end of America is talking like that. As far as the American dream is over. The American dream is done. Listen to what they are saying.
They could just go to like 13 or 14 or 15% of discretionary income, continue to spend at the same levels. And that's why there's such an enormous difference between a Discover and an American Express. I think American Express has an enormous level of insulation from a worst case scenario.
It's also why the outcome of this, however long it lasts, is going to be the wealthiest 10% end up with even more wealth.
Right, which is
because they will be adding to their portfolios of assets, whether it's real estate or equities or bonds, which will, when they do recover, you'll see even more no offense to anyone who doesn't believe this, but this is only the way it's always happened after every recession in history. This won't be no different.
What about, Josh, the outlook for bank earnings?
Did y'all catch that? What he just said. More wealthy people are going to get wealthy during this crash, like always. When it crashes, you got to be invested in something, guys. Whether it's the stock market, whether it's real estate, whether it's equities, whether it's bonds, you have to be invested in something on this crash. That's how the rich get rich. That's how the poor people go from poor to broke. From poor to rich. And that's how people go from rich to wealthy. Listen to some more of what he's saying.
Which you're starting, as we said, this week for your stock you've owned a long time, JP Morgan. Let me just remind people too, the alternative asset managers, their stocks haven't traded well at all. The Apollo CEO, Mark Rowan, is going to be on Squawk tomorrow morning at 8:30 a.m. And I don't want you to miss that because, again, this was somebody who was said to be in the mix for a potential cabinet role as well. So I can bet you that he's going to have some interesting things to say tomorrow morning regarding the current situation and what he thinks needs to happen. But you'll have to watch for yourself and find that out, please. Back to you, my bad.
Yeah, financials are having one of the biggest bounces today of all the sectors, right up there with technology, which I think makes sense. These companies, thank God, are going into whatever's to come with this economy. They're going into it in better shape than they've ever gone into economic turbulence before, from a balance sheet perspective, from an earnings perspective, and I think from a risk management perspective. I just don't see the publicly traded bank stocks as being at the epicenter of what's causing this situation. It's a very different bank sector than we've had going into prior recessions, and they're also washed out. The average RSI and the S&P financials is 33. So these stocks are almost 2
Hey, Martin, how you doing? We're still here.
Sold. But here's what you're going to hear later this week and early next week when the majors report. I think they're going to have to raise their reserves. And what that does is it comes directly out of the profits that would otherwise be dropped to the bottom line. And this is just the way it goes. And I think it's a wise decision if that's what they end up doing. Jamie Dimon was notably fairly muted in his shareholder letter, which came out 2 days ago. Was actually yesterday. Was actually kind of surprised that he didn't have more to say on the subject of tariffs. But maybe that's what comes out during the conference call. We'll see. But in the end, I think what the banks have to be thinking now is, okay, do we have enough reserves? We're looking at spreads blowing out a little bit. We're hearing about stresses all over the economy. What do we need to do here? And that's not great for shareholders, quite frankly. It's just not. Never has been.
We'll take a break, and Jenny, you get ready, okay?
Okay.
Because Jenny has another new buy, and Jenny has a new book, and it's about dividend investing. What else? We'll talk about both next.
Hey, y'all, I appreciate y'all for rocking with me. Hey, Martin, glad you're back, man. Was y'all listening to everything that they were saying? Well, the bottom people are fearful and scared. They are optimistic and they are investing. They're buying these companies at a discount. They're buying them. I'm buying them. I told y'all about this in 2021. It's happening and it's happening again right now. I hope you was able to catch some of these dips at 86, 89, 94. I bought more at 94. I didn't catch the bottom. I didn't catch it at 86. I caught it at 94 as far as NVIDIA. That's exactly what I did. See, another thing that they're doing, guys, is people say that they're selling stocks, yes, but they're moving them to other companies, to other investments. Their stocks are being sold, but they're moving to other things, like what I did. I sold some of my AMD, right? I sold some of my AMD and I bought more NVIDIA. That's what I did. You take out another area and move it to another area. I like NVIDIA a lot more. And NVIDIA at $94 was a steal. So I sold some AMD and bought more NVIDIA. That's what I did. Just moving it around. Sell here, buy there. I like this company a little bit more. Sell some of those, and move it to this one. I got high hopes for NVIDIA. And if it dumps down back up under the 90 and the 80s, I'm gonna buy more. That's just what it is. That's how you build your portfolio, guys. You always have money in the brokerage account so you can catch these dips, these wholesales, as I call it. That's how it works. And then just ride it back up with the idea that you're going to hold it for 15, 20 years.
Thank you. And the Ryman Auditorium.
All right, we back, guys.
They own 5 of the 10 largest non-gaming conference centers. So they own the National in DC, the Palms in Florida, Opryland in Nashville, and they've gotten beaten up because they're mushed in with hotel REITs, and they're very different. They have, like I said, non-gaming conference centers. So huge companies book out their corporate conferences. They book them out 2 to 5 years in advance. If you cancel, you're in trouble. It's trading right now with a 5.5% yield, really consistent earnings growth ahead of it. And you can look at a company like this. You don't want to look at the pandemic, that was too weird, but you can go back to the great financial crisis and say, all right, when there was a deep and sustained recession, a global depression, how'd they fare? And they fared okay. And you can stress test it and say, would they still be able to pay the dividend if we went through a scenario like that again? And the answer is yes. So sometimes you get to buy something really great in these markets, even though I think we all agree the market probably hasn't bottomed. This stock, I think, is really compelling right here. And you know what? It's already down 35% from its high. If it's down another 5 or 6 or 10% and I'm wrong and I didn't nail the bottom, I'm okay with that. This is the company I want to be invested in. It'll produce the income my clients expect me to. You want to go?
Well, I wanted to ask you, have you ever seen Jason Isbell live from the Ryman?
No.
Maybe for due diligence purposes alone.
Yeah. When I should get a free ticket. Come on.
Book your flight. Do
Okay,
it.
good idea.
So let's talk about this book.
Yeah.
Dividend Investing, Dependable Income to Navigate All Market Environments. Well, sure need it now. Some are thinking. Tell me more. What am I going to learn from reading this book?
So I tried to write a book that was going to be actually very useful for people, where they could read it, and whether you're a dividend investor or not, you could learn about investment behavior. You could learn how to construct a portfolio, how to research stocks. The whole second section is actually a research process. The whole third section is toggles between stories of investments that I've made that have worked and investments that I've made that haven't worked. And they toggle between that also with client stories and say, here, this is how this client set up their portfolio. This is how another client came to it. Here's a story on real estate investing that worked and didn't work, and then why they decided to switch to equity investing. So I think it's useful. It'll give you something to think solidly about how to create a portfolio in. Yeah.
Who's going to play you in the movie? Can I say Jessica Chastain?
That's very sweet of you. You're very, very generous.
All right, Kevin, can you make some calls?
Yeah.
Okay.
Yeah. I don't think anyone's going to make a movie.
I have a copy of this book. I already started going through it. You and I are going to talk about it later this week. I'm super excited for you. Congratulations.
Thank you.
So your top 3 dividend income picks, Kinder Morgan is Kinder Morgan, Verizon, and Bristol Myers.
Yeah.
Just quickly about those before we
sure. So Kinder Morgan 4.5% yield, Bristol 4.5% also. Sorry, what was the third one that I gave you? Because
Verizon.
Verizon. Sorry, I thought I gave you Conagra. Verizon 6.5% yield. What's interesting on these is you can look at where the revenues are coming from. And in the case of Verizon and Kinder, you have 100% revenues coming from the U.S. So you're out of the tariff fiasco. Bristol, you have 71%. But on Bristol, we know healthcare is being excluded. You can look at Kinder and Verizon and say, where are their cost of goods coming from? On Kinder, maybe some steel, right? Verizon, maybe some iPhone costs, but there's enormous economic insensitivity here, and there's, relative to the broader market, tariff insensitivity, and that's why I thought they'd make really good kind of top picks for right now. So they've paid their dividends for Verizon 40 years, Kinder 14 years, Bristol 92 years they've paid their dividend. Bristol's earnings look terrible, but they produce $10 billion plus of free cash flow for the next 3 years, so they can essentially buy their way to growth. It's nice because, and this goes a lot to the book, when you're buying dividend income stocks in an uncertain period like now, some portion of your return is certain. When you're buying a growth stock, which works great too, but different strategies, 100% of your return is uncertain. You might get a bigger return, but on dividend stocks, some portion is certain.
And all profits go to the Council for Economic Education.
Yes, where I'm on the board. Very proud of it.
Congratulations on the book. Thank you for educating us and our viewers on dividend investing. We will take a quick break. Mike Santelli will be on the other side. First, though, the headlines from Pippa Stevens. Hi, Pippa.
Hey, Scott. The Supreme Court just moments ago pausing the reinstatement of thousands of fired federal employees. The top court put on hold a lower court ruling requiring 6 federal agencies to reinstate the probationary workers who were fired as part of President Trump's effort to reduce the federal workforce. The stay is in place while litigation continues. Elon Musk's Doge team is reportedly using AI to monitor communications among federal workers that are hostile towards President Trump or his agenda. Reuters reporting the team is, quote, heavily using Musk's ChatGPT rival, Grok AI, to monitor communication tools, including Microsoft Teams, and communicating with each other through the Signal app, which could violate federal record-keeping rules. The White House and Doge team did not respond for comment. And in a London courtroom today, lawyers for Prince Harry said he was treated unfairly when he was stripped of his British security detail in 2020 after stepping down as a working member of the royal family. He's appealing that decision, saying the government didn't follow its own rules when cutting the protection. Halftime Report will be back right after this.
CNBC News Update.
Rocking and rolling. We got about 90 miles to go. About 90 miles left. So that's about an hour and a half. We're almost home. Giving us a whole lot of wealth of information in that conversation. See, that's the type of circle you want to be around, guys. A circle that's talking like that, right? They're excited that these companies are on the wholesale. I'm excited too. They are excited, right? That is the circle you need to be in, having these type of conversations. Okay, everything is happening. Where can we invest to capitalize on this for us and our family as a circle? They're not complaining about eggs. They're not complaining about inflation. They're not complaining about tariffs. They're not saying the American dream is over. They're not saying none of that, guys. We ain't saying none of that. We're looking for opportunity. Because America is the land of milk and honey. America is the land of milk and honey, guys. This is the best time to be an American. Especially if you're 20, 25, 30. It's building season. That's exactly what it is, guys. It's building season. It's building season. Building season. We're trying to find some of these companies and businesses that are on a wholesale.
Market picture certainly not as strong as it was at the outset today. Perhaps Eamon Javers has some news for us from the White House to help us understand what's exactly happening. Eamon?
Yes, Scott, that's right. There's an inaccurate report that appears to be floating around the market. The inaccurate report suggests that Caroline Leavitt, the White House press secretary, had said that the China tariffs go into effect or went into effect today at noon. That is inaccurate. I just spoke to Caroline Leavitt in her office just a couple of seconds ago. She says that all of the China tariffs are scheduled to go into effect tonight at midnight, and any reporting that that happened at noon is not correct. She is working to clear that up inside the building, and I'm here to bring it to you. So wherever that report was coming from, not accurate. Tariffs go into place as was the schedule tonight at midnight, Scott.
Yeah, as was scheduled. Those are the really important words. As was scheduled, right?
Right. Yeah. So no
Barring
change
some
here.
development between now and then, obviously.
I mean, anything can happen, right, Scott? But no indication of any change here from the White House. Caroline Leavitt says she may have been misquoted, or this might have been misreported and attributed to her, but she has not said that, and she said to me directly that these tariffs are still going into effect tonight at midnight. She's going to be briefing here at the White House at 1 p.m., so we might hear more from her on camera on that.
Thanks for clearing it up. Very much so, Eamon. But yet again, you see how jittery the market is for headlines that, up, they're up or down. Guys, there's no denying the fact that the market is still around the lows of the day. Apple is red. Tesla was red as Eamon was talking about, erroneous report was going through the market for a moment. Tesla's back green. But some of the chip names, AMD, which was green, is now red. Some of the chip names were a little volatile in those moments too. But just welcome to the world that we're all
We put up Ford and GM red all day. This is one of the biggest bounces we've seen since this whole nightmare started.
Those guys are red.
These stocks cannot attract buyers. It's incredible.
Nike, Las Vegas Sands. If we're talking about stocks with maybe the most acute kind of exposure. I'm thinking Starbucks. Your Starbucks. Yep. Where's that on the list? We can throw that out. I got so many stocks in front of me. I can't even find it right in this moment. But nonetheless, you get the point. It's still green. Anything with big time exposure in that part of the world on this kind of a headline, which our Eamon Javers in his own reporting has shot down and suggested that what he was told, or said what he was told directly from the press secretary at the White House, is that the tariffs on China, 104% now, because remember they were raised, go into effect as scheduled at midnight tonight.
Wow.
Barring something that happens. We'll be right back.
Those China tariffs go into effect midnight tonight. It's 104% tariffs on China. 104%. Wow. That is a lot. I appreciate y'all for riding with me on this road trip back home from San Antonio. We're halfway home, probably more than halfway. Let's see how long we got left. Let's see. Probably about an hour left. Hour and 30 more minutes. It would be an hour, but we was in traffic for about 30 minutes. So I'm 30 minutes behind. Minutes behind, guys. come back on so we can hear the rest of the conversation. I gotta get around this Hummer so I can get back to
Javers, and here's what you have at the current moment. The Russell's now negative by a couple of points. It's, a marginal move to say the least, but you're pretty much at the lows of the day off of where we started, which was such a strong bounce back right out of the gates today. So we'll keep watching that. I want to bring some more stocks to your attention too, if I could. Netflix named the new top pick at Morgan Stanley, replaces Disney.
Damn.
The target, $1,150. Jason, you own Netflix.
Yeah, I mean, Netflix has been a great stock. Into all the tarnish, obviously, that we've seen. When I look at the last quarter, which they had a double on EPS on 16% revenue growth, they continue to focus on profitability, which has been very positive for the stock. And then when I think about just potentially the break in the consumer, there is optionality now with ad-supported tier. Their foray into live sports, I think, has been uniquely positive. So I continue to really like this stock in this environment.
You have a thought here?
Yeah, I totally agree with what Jason is saying. And this name is in the communications sector, but the truth is it's a consumer staple. I defy you to find somebody in the middle class or above who would ever cancel their Netflix, almost no matter how bad things get. Netflix you would hold even through unemployment, honestly. I think it's super defensive, super profitable now relative to the way streaming used to be. Right. Making money around the world. You've got geographic diversification there as well. No tariffs whatsoever on film production until I hear otherwise. I would assume that won't happen. I shouldn't have said it out loud. I don't want to give anyone any ideas. People forget I said that. But I think this is the type of name that investors who have to be fully invested, portfolio managers, they will gravitate toward this because of the defensive characteristics.
Otis Worldwide and 3M mentioned as core defensives to own today at Wells Fargo.
Happen to own them both.
You own both. And Otis is one of your most recent buys.
Yeah, I think the analyst heard me on TV last week talking about Otis. Because it can't be a coincidence, right? Nobody ever talks about this company. It's a tiny market cap.
You just get in the elevator, you go up, you go down, you don't think twice.
Yeah, you just get in the elevator. We can cancel your elevator? No. So this is the thing about Otis that people don't understand. They look at it and they say, oh no, this company must be so reliant on steel, or they must be so reliant on selling elevators. It's a services business. The maintenance contracts, which cannot be canceled, 87% of the company's net income. That's why I think this is defensive.
All right, we'll take a quickie. We'll come back to finals.
rocking and rolling. But we're gonna have to slow down once we get closer to Houston because those roads are not 80 miles an hour. Rocking and rolling.
U.S.
All right, Josh.
I think Netflix will work. You can hide there.
All right, I'll see you for the last stretch of trading on the closing bell.
Thank you very much, Scott. Stocks are still higher at this hour, but can you trust the rebound, especially as we're fading? The next round of tariffs is set to take effect at midnight. Hello and welcome to the exchange. I'm Kelly Evans, and here's what's ahead. The White House softening to some extent its public message around tariffs, as Congressman Ro Khanna calls Howard Lutnick stuck in the 19th century, and Elon Musk and Peter Navarro, well, they're calling each other names on X. We've got the latest, including where people are finding opportunity amid all the chaos right now. You can see the market boards right there in front of you. The 10-year as well, let's not forget. We're well off the highs of the session for stocks, and Dom Chu is standing by with all the numbers. Hi, Dom.
In fact, Kelly, let's just say that in the last minute or two, we hit session lows in the stock market right now. But what you're seeing is green, so that's a positive, net positive, I guess, overall. But we're at a level of 5,090 for the S&P. It is a recovery, but we are only up about 25 points. It's nothing to sneeze at. It's up 0.5%. But at the highs of the session, it was much stronger. We were up about 205 points at the highs of the session, and we're only up 22 right now. So again, green but fading a little bit. The Dow Industrial's at 38,299. We're up 335 points, almost a 1% gain there, but up quadruple digits at one point as well. The NASDAQ Composite up about 0.2%, 25 points higher to 15,625. Now let's put some of these moves in context. These are solid, but we've got a long ways to go before we get back to where we were just even on Tuesday and Wednesday, before much of the melees around tariffs, the tariff tantrum, if you will, started to happen. The S&P 500 over the course of the last week, you can kind of see here, before we've now dropped roughly 600 points through yesterday's close. We've gotten back about 17 of them today, even at one point about 200. So keep an eye on the relative move that we're seeing with the S&P 500. Over the last week, we're still down about 10%. Let's check on the Mag 7 stocks. They were the primary drivers that bounced back today in some of those moves that we saw in the overall markets. For good reason. They're very heavily weighted. But now Apple is down about 1.33%. Nvidia, Amazon, Meta Platforms, and Tesla are now trying to find some stability here. Tesla is still seeing some downside volatility, but Apple, Nvidia, Amazon, Meta Platforms, Tesla, if you throw in the rest of the Mag 7, that group of stocks alone lost about $1.8 trillion in market cap, again, just themselves over that 3-day stretch. So keep an eye on those. And then oil prices, maybe they were the tell today. We saw some strength there, but they faded a little bit earlier on and continue to fade right now at about 1.33%. $59.87 per barrel is the last trade for U.S. benchmark West Texas Intermediate crude prices. Remember, over the course of the last week or so, we've seen some sharp moves lower. We're still now below that 200-day moving average. Keep an eye on crude oil. Maybe one of those indicators, if you will, for the future. And by the way, Kelly, the
energy sector in the S&P, far and away the worst performer over the last week. I'll send things back over.
All right, Don, thank you very much. Let's get down to Washington, where two of the president's closest advisors are trading barbs over how to tackle the Trump trade agenda. But before we get to that, Eamon Javers is standing by with the latest on the China tariffs. Eamon, when's the last time we had two kind of misfired newswire headlines in a 24-hour period, practically?
Yeah, it's becoming a familiar feeling around here, Kelly. So first thing first, there is this inaccurate report that's been floating around in the market over the past couple of hours that suggested that Caroline Leavitt, the White House press secretary, had said that the tariffs on China went into effect at noon today. I spoke to Caroline Leavitt in her office a few moments ago. She says she didn't say that. She's been misquoted, or there was misreporting here, and she confirmed to me that the tariffs do indeed, as planned, go into effect at midnight tonight on China. So just to clear that up, because that was moving markets fairly significantly over the past hour or so. Then secondly, we've got this fascinating eruption into public of this spat between Elon Musk and Peter Navarro, the richest man in the world and the government cutting expert here in the White House, against the trade advisor, a man who went to jail out of loyalty for President Trump. Musk taking to his own social media platform, X, to call Peter Navarro a moron and to say that he is dumber than a box of bricks, I think, or sack of bricks. He says he's a moron. What he says here is demonstrably false. Tesla has the most American-made cars. Navarro is dumber than a sack of bricks. That's Musk reacting to Peter Navarro, suggesting that Elon Musk is not an automobile manufacturer. He's more of an automobile assembler, putting together parts in the United States that were made elsewhere. So that fight erupting into very public view here over the past couple of hours. And then Caroline Leavitt issuing a statement on that. Again, the White House press secretary telling me in a statement, whatever, we are the most transparent administration in history, expressing our disagreements in public. So the White House sort of shrugging off this conflict between their two top advisors, but it is a significant one, Kelly, in the sense that you have the Elon Musk school of the world, which is, he's a builder, he is a doer, he is somebody who is deeply ingrained in the global markets and has extensive business ties in China. He is feeling the pain of these tariffs. And then you have Peter Navarro, the trade advisor, who is deeply committed to this idea of disentangling the United States and China, disentangling supply chains, and really U.S. trade with the rest of the world. He wants to manufacture things here in the United States, and he's one of the chief architects of the president's tariff vision. So the question for the White House is, which one of these men will President Trump ultimately side with? For now, the White House is tolerating the spat in public view, but at some point, the president, will ultimately have to pick a side here, and we'll, all be watching carefully to see which side he ends up with.
Eamon, I can't help but wonder if Musk is setting up a trajectory for himself to leave the administration over a disagreement instead of being forced out.
That's an interesting possibility. I think the disagreement is legitimate, not manufactured, but it also could be an opportunity to walk away. And there have been a lot of questions about when exactly Musk's tenure here would be over. He's a special governmental employee, and that gives him a deadline until sort of around the end of May before he can't use that status anymore. So that had been the thinking of when Elon would leave the administration. The president has said he would leave relatively soon when his work is finished. We just don't know. Could that date be hurried up till tomorrow? I mean, anything is possible. No indication of that right now, though.
No, not at all, but just kind of thinking through the sequence of events. Eamon, for now, thanks. Eamon Javers at the White House. And while discord is brewing within the White House, some members of Congress voicing concerns as well. Congressman Ro Khanna, today a Democrat representing Silicon Valley, criticized Commerce Secretary Howard Lutnick on Squawk Box this morning for being out of touch, as tech companies, many of which are based in Khanna's district, have been sliding by about 10% in the past week.
The screws and the assemblies of screws are like 0.3% of the iPhone's cost. You have the display, you have RAM memory, you have the camera, and I know Lutnick loves 19th century policies, but he should understand 21st century production.
Here now to discuss, we have our own Steve Leisman along with Wells Fargo international economist Brendan McKenna. Needham's Laura Martin is also here to talk more specifically about Apple and those screws, which is coming off its worst three-day slide since 2001. We'll get to that in a moment. Brendan and Steve, welcome. Steve, let's start with you. There's no evidence, despite all the market's hopes, that the White House is going to back off. There's no evidence they're going to do so.
It seemed to me that the better attitude of the market came from the idea that maybe Lutnick was being pushed out. That was in one of the journal stories, I think, or being otherwise perhaps downgraded, and the idea of Bessent, the Treasury Secretary, being more in charge of the trade issues and that they were negotiating. But I still think, Kelly, we're where we were, which is this notion of probably some form of permanent tariffs with the possibility that some of the most extreme ones could be negotiated away, but still unclear. We're still in a place where it's not clear both what the ultimate end is, and that was, by the way, something that Congress today, senators today, in the grilling of the trade representative, they were asking her, what's the end game, what's the timeline? I think Wall Street's asking the same question still.
Yeah, Brendan, you're looking at the international piece of this, and it's been fascinating to watch the posturing. But again, we've had a handful of nations basically trying to be cooperative, and the White House is still being pretty vague about this negotiation. You know, just to use the word negotiation doesn't mean they're going to say, sure, that the U.S. tariffs are coming down. They could be saying, we're sticking to our guns until you pledge X hundred billions of investment into our country or something like that.
Yeah, I think you're absolutely right. You know, I think we're starting to see some headlines as it relates to Japan and maybe South Korea, also maybe Indonesia, that maybe are a little bit more willing to come to the table and negotiate and try to bring some of those tariff rates down. What's your earlier question and your earlier point? You know, I definitely think that there are some tariffs here that are going to be permanent in nature, and I think the more contentious, more hostile trade policy is certainly going to be a cornerstone of the Trump administration for at least the next 4 years or so.
Right. What do you think the real fallout is, though? I mean, if you had to say the most noteworthy response you've seen from the international economies affected, from Vietnam to you name it, to Taiwan, I mean, all the rest of them to Europe, what do you think it is so far?
I think it's really the response from China. You know, I think the initial response to Trump administration tariffs on China was that China was going to take a more gradual approach and they weren't going to be overly retaliatory. But that narrative has really flipped in the last, call it a couple of days or so. They responded with a 34% tariff. Then you see headlines overnight that they're not going to back down from a tariff fight. And I certainly think that they're willing to dig in for the long haul. So I certainly think the most kind of interesting response has been from the China side, and then maybe some of the other closely knit China economies in Southeast Asia as well.
Yeah, it's been also amazing to watch it go from being on the back burner a month ago to very much on the front one. Markets are losing pretty much all of their gains here. I just want to point that out. The Nasdaq has gone negative. The S&P is in danger of doing so. We have some headlines, meantime, from the U.S. trade rep's testimony before Congress today. Let's bring in Megan Casella with some more details. Megan?
Hey, Kelly, so a 2 or 3 hour hearing with the trade ambassador where he really forcefully defended the administration's trade agenda. He talked about how they are open to negotiations with trading partners who are not retaliating. He signaled that there was doubtful that there would be a deal with China anytime soon, saying that they were not coming with sort of open eyes to those negotiations, that instead they were retaliating, which he said the president did not like to see. But the other interesting secondary story, I would say, in this hearing, Kelly, was that it was really a chance for Republican senators to start to air some grievances, I would say, about this administration's trade policy. Take a listen to some of what they said.
I believe that Congress delegated too much authority to the president in trade.
Who pays these high tariffs? In the short, medium term, it will be the consumer. It'll be the consumer.
We want fair trade, but I hope you recognize, tariffs are double-edged sword. I would argue a somewhat blunt instrument. There's going to be an awful lot of collateral damage. People are already feeling that pain, so I hope you're sensitive to that.
Whose throat do I get to choke if this proves to be wrong?
All Republican senators there, Kelly, talking about this. So I want to emphasize a lot of them were saying we do want fair trade, saying they were aligned at least with the president's overarching goals. But they were asking the trade representative repeatedly, what is the end game here? Are these negotiations permanent? Is there any chance that these tariffs don't take effect tomorrow? And on all of that, the trade ambassador was really aligned with the president, not wanting to get ahead of him and saying what he was most focused on was trying to reduce trade deficits and bring manufacturing back to America. So we still have to see a bigger push from Republicans before they could do anything to really claw back some of that trade authority delegated to them under the Constitution initially. But at least for now, we can see there's at least some signs of discontent on Capitol Hill.
I think when Senator Tillis asks, whose throat do I have to choke? I think it's fair to call that some discontent, Megan. Thanks, Megan Casella. Steve, I'll turn back to you for the significance of all this.
Well, I think we are where we were. I've been researching, Kelly, the extent to which we were a great nation in the late 1800s, and I'm not really finding that. Life expectancy was around 40 years rather than what it is right now. So what I'm concerned about, Kelly, from an economic standpoint, is this idea that we go down the value chain when we put these tariffs on. Let me explain what I've been thinking about here, which is that by definition, U.S. manufacturing right now, such as it is about 11% of private sector GDP, down 4 points from, say, 2005. But any manufacturing that's here is high value added because the labor component is going to be a small piece of that. Now what we're doing is we're going to tariff the inputs into that, which would make that less costly, more expensive, less affordable, and we're going to try to go down the value chain to basically create those inputs, and those are lower value added. So I'm concerned here that we're going to be trying to go backwards and try to make a deal with the past, but there's nobody in the past to make a deal with.
Brendan, all of that said, the White House, look, and Steve, let me go back to you for a second. You saw Steve Moran's speech at Hudson yesterday, yeah?
I did not know.
So if you look at the architects of this vision that Trump has, and I think you could call Moran one of them, I think you can say Bessent is one of them. He elaborated on this at great length last week in an interview. They're moving forward. they're clearly trying to go in this direction, you know, and imagine what this new, and they talk about automation, and we talk about the factories. That's what's so fascinating. They're cognizant of everything that you're pointing out, and they and Lutnick and others have talked about, you know, now we have robotics, now we have AI.
Let me just make one point that I thought was interesting. Was Bessent this morning said he didn't come up with the formula. By the way, that's reporting that I've done, and also a very nice piece of the Washington Post that really broke that story, that Treasury had a plan for reciprocal tariff that made a lot of sense, and the president came up with a plan that nobody can really make sense of. And in that regard, it depends on what we're talking about here. Bessent seems to be somebody who understands the idea that there needs to be negotiation, there needs to be free trade. And you were talking about it earlier with Eamon, this idea that there appear to be a wing of the president's advisors that want to erect barriers around the whole country, call it Fortress America, and leave everything out of the country. And the idea that the market seemed to rally this morning, going back to the first question you asked me, seemed to be the idea that maybe more the Bessent wing was a little bit in front. I'm not even
sure I would call it, and we can't go into too great length here, but there's the vision encompasses China, it encompasses the U.S. being the reserve currency, it encompasses the way that's been a headwind in many ways over the past couple of decades. That's one of the reasons we've lost manufacturing. So it's all linked together for them. It's bringing down the deficit. I'm not saying whether they get it right or wrong, but the vision is multifaceted, and all of these things need to happen for it to work.
I think the vision is very blurry, and I think it's inconsistent. That's my problem with it. Do you want a strong dollar? Well, you can have a strong dollar, but recently, by the way, the dollar has been weak. Part of the way that we are the reserve currency is we run a trade deficit, Kelly.
Right.
And I honestly, I'm not sure that they understand that in the White House. People send us stuff so that we can have their dollars. So they can have our dollars. That's the weird thing about all this, Kelly. I don't think that they get that the other side of the trade deficit is a massive capital account surplus where they buy our treasuries, they buy our stocks,
I think they do.
They buy our assets.
They know that means we overconsume, right? That our
Who's to say we overconsume? Who is it? This is the Republican Party
the investment in the country, meaning we consume beyond, you know, S equals I. We consume beyond
we consume what we want to consume. That's part of the freedom of being an American, isn't it? Who's to say we overconsume?
Based on the stock of investment in the country.
You can see that by looking at me, I overconsume, but that's another story.
No, listen, I do too. All right, let's turn to Rick. This is a plank of the story we're talking about here. We've seen stocks, including the S&P, now give up their earlier gains, which were sizable, turn negative. We had an auction that didn't go all that great. Let's bring in Rick Santelli for some more on this. Rick?
Yeah, you know, we had the first leg of treasuries, 3s, 10s, and 30s offering, and the 3-year leg did not go well. It tailed. The metrics were all weak. I gave it D for demand and D for dog. And if you look at the market, interest rates have been going down. They turned. We know that stocks and rates have been joined at the hip, but that turn is something to pay attention to, and it came at a time where stocks were already making fresh lows on the session, and I do believe that the reversal in rates gave them a little bit of a push, and it does underscore that the relationship between treasury yields and equities, well, it could morph at any time. We need to pay very close attention to a flight to safety trade is one thing, but starting to see rates maybe get a little more stubborn, especially on the long end, for a variety of reasons, is going to be the type of move stocks do not necessarily follow. And if you look at the yield curve right now, 2s, 3s, 5s, 7s, 10s, 20s, and 30s, every maturity is now higher on the day. So the auction really did reverse a lot of green back into red in terms of yields.
Rick, can you clear up a little bit of this market confusion, some of these talking points that say China's dumping treasuries in order to force our yields higher, make Besant look bad, and so forth? People are going to say it'd be hard for their currency to weaken if that's the case, because if the currency weakens, don't they have to buy treasuries? And oh, by the way, if we have inflation expectations going up like TIPS did, is it possible the tariff announcement yesterday was just pushing up inflation expectations and pushing up the 10-year, and this isn't so much a symptom of Chinese buying or selling?
I don't think I could agree with any of those assumptions, to be honest with you. The behavior in the dollar doesn't underscore a big liquidation in treasuries. I think what's going on in treasuries makes more sense when you look at it under the microscope of what's going on in equities. And as far as what's moving the market and what interpretations are and how all of this fits in, I think it's anybody's guess at this point. I do think that when we look at the dollar, we can't be very short-sighted. Look at a 25-year picture of the dollar index and see how much time it spends above or below 100. We could say we've weakened, but it's a during COVID, post-COVID move that's really reversing. In the grand scheme of things, our dollar historically is not weak at these levels. And to take another avenue, many believe that much capital in this country is here because of the strong dollar and reserve currency. And for the first time in my lifetime, there's many people I normally agree with that think a reserve currency status may be something that we're better off without. Right. I'm not saying I agree with it, but there's a lot of moving parts here, and I think we shouldn't be superficial in some of these moves that really are not explained by the news of the day as much as everybody wants to connect those dots.
The exorbitant burden, as Michael Pettis calls it. But I think the administration wants that burden, right? It's an important tool of political leverage to be able to kind of impose sanctions and everything, but now they're trying to use a different economic regime to
I think the bigger story today is that the offshore yuan, which of course has a shorter history than the actual renminbi, that's the official, is at the all-time lows against the greenback. That, to me, is a very important story regarding China, and it underscores what the administration may have actually right on all of this, and that is many countries have a better thy neighbor approach to their currency because they're export economies.
So, and Rick, thank you. Let me just get a quick last comment from our panel. Brendan, I'll turn to you. What's the net effect here? If you have anything to add on what you think is going to happen with China's treasury buying, if the currency is weakening and now the U.S. isn't as open as a market, should the Europeans and others be worried that these goods are going to flood their markets?
I think they should absolutely be worried. Overproduction, overmanufacturing, excess supply. These are all themes that have been coming out of China really in the post-COVID years. And now I think if the United States is not a viable marketplace for China, absolutely the European Union, Australia, other parts of Southeast Asia, they could be dumping grounds for a lot of Chinese goods, a lot of Chinese product, and a lot of Chinese manufacturing. And that's a deflationary pressure. That's something that can ultimately weigh on global growth and cause a bit more turbulence in financial markets.
Mr. Leisman, a final word.
Just what Brendan is saying, you've blown a lot of things up, I guess is the best way to say it. From a world trade standpoint, things are up in the air. We don't know where they'll land. I think one of the things I'm concerned about are what you might call occluded losses. And we don't know, Kelly, where the losses are going to be among those who are going to be hit by the tariff. That was one of the reasons, I think, for the extreme selling pressure. Really, analysts don't know where it is. And in fact, I was talking about this morning, JP Morgan put out a spreadsheet for individual investors to look at individual companies to figure out how much tariff exposure they have, because all of this hit the market so quickly that analysts have not had an opportunity to analyze either every company or every industry. That's a process that's ongoing as we speak.
Perfect segue to Apple, gentlemen. Thanks. Steve Leisman, Brendan McKenna with Wells Fargo. We appreciate it. Actually, let's go to Diana first. On the back of the climbing 10-year yield, you know what that means for mortgage rates, people. Let's bring in Diana with that latest number. What do you see?
Well, Kelly, mortgage rates really reversed course this week, moving to the highest level in over a month today. The average rate on the 30-year fix jumped 22 basis points yesterday, another 3 today to 6.85%, according to Mortgage News Daily. This fully erased the decline from last week. So much like the stock market, the bond market has, of course, been on roller coaster over the last week, and mortgage rates are along for the ride. Last week, the 30-year fixed dropped to the lowest level since last October. That was after President Trump announced the reciprocal tariffs. Now, that drop had housing watchers cheering a potential boost to the lackluster spring market. Mortgage rates had been moving in a very narrow range since the end of February, lower than last year, but really not by much. The biggest drop, actually, in rates so far this year wasn't last week. It was in January and February, when the 30-year fell from a high of 7.26% to 6.74. But despite that drop, pending home sales, which are a measure of signed contracts on existing homes, it's the most recent indicator of activity in housing, it rose just 2% in February from January and was still close to 4% lower than the year before. So it's not just rates. Home buyers are also contending with high and still rising home prices and a growing lack of confidence in the broader economy and their own employment. And Kelly, one more stat I want to throw at you that I got from Redfin this morning: 1 in 5 home buyers will sell stock to fund their down payment. You think they want to sell stock right now?
That's a great stat. Something we were all debating is which would kind of hurt more. Would the weak stock market hurt more than the lower mortgage rates help? And now we don't have either one, I guess.
Exactly. It's 6 of one, half in the other. I think it's less about the daily rate moves on mortgages and more about the broader economy, the stock market, and what people really want to do with their money right now. Single largest investment for most is their home.
All right, Diana, appreciate it. Diana Olick. Let's turn back to tariffs, as there's one name that's really been at the epicenter of this global trade war, especially as things ratchet up with China, and that's Apple. The stock is coming off its worst 3-day stretch since 2001. It's down 20% in just the past week. UBS among those saying Apple products could see big price hikes thanks to these levies. The cost of the iPhone 16 Pro Max rising 29%, $350. The iPhone 16 Pro could cost $120 more. Is this a once in 2 decades buying opportunity after the sell-off we've seen? Our next guest says not so fast. Let's bring in Laura Martin. She's senior analyst at Needham. Laura, by the way, look, $350, $120, that's not as bad as estimates that the iPhone could cost $3,500. So the numbers do seem a little bit all over the place.
I mean, I think the thing that's incredibly important about tariffs is that they add about 50% to the cost of Apple. And so what happens is your $7.32 EPS estimate loses $2 if actually China stays at that 54% and India stays at 26%. So it's not the revenue that's the big question that tariffs brings. Tariffs brings this big question about what are the cost of goods sold, and therefore how much falls to the bottom line and how much free cash flow does Apple have compared to what consensus estimates are. And most of us aren't changing our estimates because the situation is so fluid.
Oh, sure. Is there any way in which they can absorb this? I mean, at least in some meaningful aspect, absorb it into their bottom line?
I mean, we're assuming that they don't raise price, and they've said they're not going to raise price. So they're going to hold U.S. prices as steady as they can. But if they do that, then their costs go through the roof. Yes, they could pass 20% of the cost increase into consumers' hands. And so your iPhone, all those numbers you just gave, increased by hundreds and hundreds of dollars, which drives inflation in America. So we end up with higher bond yields.
Why don't you think this is a buying opportunity for Apple?
Oh, this is isn't the worst case. This is the impact of a negative $2 on EPS for this year of $7 is where most analysts are. Is only the direct impact of the Trump tariffs. If China retaliates, or if they invade Taiwan, much worse for Apple, right? So there's lots of worst cases for Apple. But again, it's just so hard to know. It's so hard to know what's actually going to happen with tariffs a week from now, 4 weeks from now. U.S. is 25% of the global GDP, so anything that hurts trade hurts us 1 out of every $4. So
we just got a headline as well from the White House, Carolyn Leavitt at the press briefing, saying the president believes the U.S. has capability to make iPhones.
Yeah, I don't think that's a thing. I mean, our estimates are that it'd be 3x, whatever you thought, just quoted the price, 3x that. And you couldn't do it immediately. It takes years. India's taken like 3 years to get to 14% of their iPhone volumes.
Right, exactly. And this has raised a lot of questions about the workforce, and can you literally, even if you had to turn the switch tomorrow, kind of turn to the American workforce to make these phones in the same way? I don't know whether anyone can figure that question out, but this is supposed to directionally tell us what's going to happen with EPS in the meantime. And I guess, like you said, if you went from $7 to $5 this year?
So if we were moving estimates and analysts aren't moving estimates because of the uncertainty, yes, we would go from $7 to $5. And that's just on the Trump tariffs alone, not anything worse than that yet.
What are the reverberations, Laura, you think, for the rest of the companies you cover?
So consumer confidence affects everything in advertising, and advertising has 80% margins. This morning there was a study out from last week. 43% of people, CMOs, so chief marketing officers, said they were going to cut back spending in linear TV, cut back spending in social media, and cut back spending in like analog media, like yourself, for example, because that's what they need to offset the tariff cost increase. So they have a deliverable to their parent company. Because of tariffs, their costs on the goods that they're importing in the U.S. are going up, so they're going to cut marketing spend to offset that so they can hit their promised budget to their CEO this year.
Yeah, no, I think that makes a lot of sense. Obviously, companies have to look to cut where they can before they go into kind of, the work base of their core operations. Would that put something like Netflix, which just got an upgrade today, it seems to be sitting in a nice insulated position from a lot of this, but does an advertising pullback affect them too?
Not really, because Netflix is very new to the advertising world and they've been doing a very poor job of driving advertising growth. So no, I would say I agree with your prior speaker. The Netflix is almost like a durable that people can, if they can't afford the $20 Netflix price, they just go down to the $7 ad-driven tier.
All right, Laura, we'll leave it there. As Netflix is still higher by about 2% today. Apple has given up its gains. It's down about 3%. Laura Martin from Needham, thanks as always for your time.
Thank you.
All the tariff turmoil is prompting economists to revise up their recession probabilities and for market strategists to revise down their year-end price targets. Our next guest is still standing by his 6,500 original price target, but does think we could see another 7 to 8% drop here if the White House doesn't back down on its plans. Mike Wilson is the CIO and Chief U.S. Equity Strategist at Morgan Stanley. That price target is looking tougher by the day. Mike, welcome.
Yeah, how are you, Kelly? Good to see you.
Good to see you too. So just kind of walk us through how you're thinking through all of this.
Well, I would say, first of all, we're not really talking about 12-month price targets in this kind of an environment. And I think, we came into this year pretty defensive in the first half. We talked about a tough first half and a potentially better second half. And so we've been very focused on our first half targets, which were sort of 5,500 to 6,100. We obviously went right through that on the announcements last Wednesday because they were worse than we expected. And those first half targets are coming down. And quite frankly, that's all people care about right now is how are we going to trade the next 2 or 3 months. And that's part of our offering. Right? We're technicians. We know levels pretty well. We have a lot of information on flows and positioning. And I would say right now we're in a classic bear market. That's how we're trading. We're trading as a bear market. So it's all about technicals, and that's how we're really trying to help clients now, whether it's at the index level or it's at the stock level. And I think the price action the last 2 days is very informative, right? We had very capitulatory behavior Monday morning. I mean, all of our signals that we look at were triggered. We had, positioning, sentiment, the RSIs, everything was there for a bounce. But that's what we're getting. We're getting a bounce. And I find it really interesting. Yesterday on the news for the false headline around the tariffs coming off, we kind of bounced to sort of 5,300. And then today, the whole rally, it just went right back to that same level. So what I would say is we're establishing a new range. That range is yesterday's lows, call it 48.50, to today's highs or yesterday's highs, which is around 5,300. And until further notice, that's the range that's going to get traded here on these headlines.
So is it significant to you that we're turning negative on the session today, that if we were to close negative again?
Well, it just means that we probably can go revisit the low end of the range. I don't think it tells you anything that we're going to have to take out that range. We're probably going to need some new information, more negative information, to probably take out yesterday's lows because it was so capitulatory. It was the highest volume day on record. We had liquidation. I mean, we had defensive stocks going down. We had, and as you noted earlier, talking earlier with Steve around the bond market, part of the bond market sell-off was just people selling what they can sell rather than what they want to sell, right? So we're seeing classic signs of sort of forced liquidation. That's capitulatory, right? So you're going to need something incrementally negative to take out the low end of that range, in my view.
I still would feel a little bit more comfortable in a weird way if the 10-year was at 390 right now.
Well, sure, that helps valuation, right? That makes the case that, okay, we've got there on valuation. And that's really probably the biggest, I think, hurdle right now is that we came in to this year with extremely high valuations, and I think people trying to justify them, saying it's a new normal, whatever. And high valuations are always a risk. And so part of this correction. By the way, this correction started 4 months ago. It didn't start 2, 3, 4 weeks ago with the tariffs escalating. This has been ongoing, which is part of our thesis, which is that the first half was going to see growth negative effects from not only policy but also the AI capex theme, which has kind of lost some of its luster. Also, the Fed. Don't forget the Fed stopped cutting rates in December. So there's just an enormous number of headwinds beyond tariffs. Tariffs is catching everybody's attention because it's probably the one that has the most uncertainty to it. It's very hard to measure. But let's not kid ourselves. There's probably 3 or 4 or 5 other headwinds that have been weighing on stocks now for most of the year.
I spoke with Bill Miller over the weekend, who pointed to the fact that the last few times we've seen back-to-back 4% declines like we saw on Thursday and Friday, I think it was 1987, 2008, moments like that. And after 6, 9, 12 months, we were always higher. So I don't know if that gives comfort at a time like this, or if it just points to just how big this dislocation is that we've been through. And just because we've been through it and because the worst may be over doesn't mean the market is, think back to 08, right? We had some real washout moments, but then there were also just kind of months of grinding and forming that bottoming process.
I couldn't have said it better myself. I mean, when you have this sort of action, you should be getting more bullish, not bearish, right? And that's why we're not throwing in the towel. That and by the way, the 6,500 stands, but it's not necessarily in 6 months, right? It's sort of a longer term view that the good part of the policy changes are still to come. That would be lower rates, fiscal consolidation, deregulation, perhaps incremental tax cuts, right? That stuff is on the second half of the agenda, and the markets are discounting machines, right? And we peaked in November, December on the expectation that everything was going to continue on that pace, but the market's smarter, and it figured out that no, that's not going to be what's happening. It's going to be we're going to these growth headwinds. Well, who's to say that in 2 months the market isn't looking ahead 6 months and saying, you know what, everybody's forgotten about these good things that could be coming down the pike. And the other thing I would say is that the IT excitement around that has really been excitement around AI capex. That's really it. But if you actually look at the IT spending for the last 2 years, it's been in a recession, just like most of the private economy. So we've been talking about sort of a rolling recession at periods of time. I could see a rolling recovery where you don't really want to focus just on the S&P 500, but parts of the economy are going to start recovering sooner because they've been going through such a tough time for the last 2 or 3 years. And that's really what our work we're trying to do now. But in the moment today, it's about these technical features and the market trying to find a level. It's way too early to be making calls about a rolling recovery, but it's not as far out perhaps as you think.
Do you look at things like the home builders, which were green on Friday? I haven't checked the price action today. Do you look at an Apple, right, down 30% year to date, down 20% in a week, red again today? I mean, are there areas where you can just say, you know, the market has done so much work here that you can have conviction, or because of the tariff situation and Apple's unique supply chain, is it, you know, just kind of stay away and wait for more information?
No, it's exactly what you said. We're looking for areas that have been, you know, have done so much work to the downside really for the last year or two. And I would say a few areas, you know, we're not pulling the trigger. We've been underweight these areas, but, you know, we're looking at them. Seems like home builders, things like consumer goods, where there's been, you know, a lot of price deflation, perhaps even semiconductors and other parts of IT spending away from AI that, you know, have had a tough time. These are areas that are ripe for, you know, a bottoming process. It's probably too early, but to me, that's going to be what you should be focused on. You shouldn't be focused on trading index level, you know, everything bottoming at the same day. There's some event that, you know, brings in the all clear. That's what investing is all about. No different, by the way, when things get extended, you say, it's time to let go of this stuff. You know, like last year, a lot of stocks got extended, and it's like, this is in the valuations you can't justify, so we got to let it go. So yeah, we're looking for areas that are more cyclical in nature. It's not there yet. They've been through a 2 or 3, you know, kind of recession on their own, and that rolling recovery story is something that could perhaps play out in the second half as rates come down.
Super interesting. Mike, thanks for bringing us that perspective today. Appreciate it.
You bet.
Mike Wilson with Morgan Stanley. One area we're watching are the cruise lines. The shares of Norwegian up 2% after being up nearly 7% earlier. Now this comes on a big pivot. They hit a 52-week low yesterday. You got tariffs, tax questions, recession fears all weighing on the space this year. Some analysts have been turning bullish. We've talked about that, expecting a trade down on vacations to boost cruises. Let's talk to one of the key players now, Norwegian CEO Harry Sommer. Our Contessa Brewer brings us that. And Contessa, we appreciate it. There is just so much going on right now. It's great to hear from Harry. Welcome.
Yeah, it's been really interesting, Kelly, because here we are, Harry, at C-Trade, which is the cruise industry's big conference, and you and your competitor CEOs were on stage today. Basically, the consensus is tariffs are not an immediate impact on supply chain. And are you susceptible to recession? Yes, but resilient. That being said, you're just off an earnings call where you said, look, 2025 is looking great. We've got all these forward bookings. How are you feeling about consumer sentiment, given all the changes that we're seeing in the markets?
You know, I think, you know, you said a lot of things. I'm going to try to unpack them to the best of my ability. You know, we think at the forefront that cruising represents a fantastic value. You know, when we study it, the average cruise is priced about 30% better than the average hotel vacation. And we're such a small percentage of the industry. We're about 2% of the overall global vacation market is cruising. So when you look at our low penetration, our great value, if you will, value gap with hotels, we think, I wouldn't say that we're recession proof, but I think when there are bad times, people still want to go on vacations. Cruising represents a tremendous value.
You haven't seen an automatic reversal of course, like forward bookings just plummeting because of the jitters that we're seeing shaking the markets.
Listen, there's no doubt that the last few days have been a little rocky for us. I think every company around the country is sort of living through these changes that we've gone through since last Wednesday. That being said, no dramatic U-turns. You know, we have the benefit of being about 65 to 70% forward booked for the next 12 months. So 2025 is pretty much done. We're now looking maybe for late Q4 25, early 26 for bookings. We have time to be patient, and we will be patient.
You know, there's a lot of talk this week about America bringing manufacturing back to the United States. And we used to be a big shipbuilding country, and we're not anymore. You're launching a new ship this week, built in Italy. Italy has a way of keeping the shipbuilding in Italy by financing the shipbuilding.
Sure.
Is that something that could work for America?
You know, really, it's an entire ecosystem that Italy and also Germany, France, Finland, there are 4 countries in Europe that build ships. All 4 of them have developed this comprehensive infrastructure. So yes, financing is definitely a piece of it. The Italian government supports the construction of ships for export, if you will, for use in international waters, and they give us very favorable terms. You know, we have 3, 4, 5% interest rates, you know, fixed over a 12-year period. It's great terms for us. It allows us to have good returns to our shareholders, our stakeholders, in financing the ships. But it's not just the financing. They've created an entire infrastructure: engine manufacturing, cabin manufacturing, theater manufacturing. The United States can get into these things, but I want to be clear, it takes years to develop that type of talented infrastructure. So it's possible, but we need to embark on a multi-year, perhaps multi-decade path.
You mentioned the pandemic on stage today, said very dark. Aon and their marine expert said it is still the primary threat to the cruise industry. What have you learned from the pandemic, and how does it help you be resilient in the face of other economic headwinds?
You know, we certainly don't see it as a primary threat to the industry. I'm not sure where Aon was getting their information from. You know, the cases of COVID are way down. It's almost equivalent
I
to
think
the,
they meant
to
a
the
global
flu.
pandemic.
Okay, there you go. We'll shift that a little bit to a global pandemic. You know, I think we learned a lot. We learned a lot in terms of how to operate safely, how to operate in environments where there are unknown things like this happening. I wouldn't say that we necessarily did well during the time, but we learned a lot of lessons, and now cruising represents probably one of the safest vacations out there.
Harry, it's good of you to join us on a busy day here in Miami. And Kelly, it's been a really interesting view of how the whole cruise industry is riding these rough seas of tariffs that we've seen roil the markets.
Yeah. Thank you for having me.
We really appreciate it. Hey, Harry, can you hear me, by the way?
Yes, I can, please.
Do you want to comment? You know, remember the Commerce Secretary made some accusations about your industry not paying taxes and so forth a few weeks back. Have you had a chance to respond to that?
Yes, here we have. We actually headed out to D.C. last week, me and my fellow CEOs, to talk to our friends on Capitol Hill. So the truth is, cruise lines pay $2.5 billion in taxes to the federal, state, and local municipalities throughout the country in the United States. So any narrative that the cruise industry doesn't pay its fair share, doesn't pay taxes, is simply incorrect. In fact, we and there are other cruise lines actually have U.S. flag vessels that are subject to normal income tax structures as well. So we absolutely believe in the United States, we support the United States, we pay our fair share of taxes. I just want to be clear that, though, the administration has been great supporters of us as well. And I think I said this in the last earnings call, the work that they're doing to try to get peace between Ukraine and Russia with the temporary ceasefire, the work they're trying to do now in the Middle East with Gaza and Israel, to the extent that those regions in the world can stabilize, that can unlock tremendous value for the cruising industry to go back to places that were very popular with our guests.
Yeah, no, I appreciate the constructive attitude. You could work in diplomacy. Do you know where that came from, this idea that your industry is not paying taxes then? Is that just fake news?
You know, I'm going to be honest, we don't. I don't know where it came from. You know, the people that we've talked to in Capitol Hill support the cruise industry. They realize not just the taxes that I mentioned that we pay, but the hundreds of thousands of jobs around the country that we support. You know, our ships visit 19 states and territories in the United States, and we source things like beef and grain and things like that, pretty much from all 50 states in the U.S. So we believe we're a great engine for the U.S. economy as we source all these things locally, and we plan to continue to be that way.
All right, Harry, Contessa, thanks. We appreciate it today. Norwegian's Harry Summer, our own Contessa brewer. To Bertha Coombs now for the CNBC News Update. Bertha?
Kelly, the Justice Department is disbanding its National Cryptocurrency Enforcement Team effective immediately. According to a memo sent Monday night by Deputy Attorney General Todd Blanche, the U.S. Attorney's Office will take over digital assets cases that involve criminal matters, including terrorism, while the Market Integrity and Major Frauds Unit will stop pursuing cryptocurrency cases in favor of immigration fraud. At least 27 people died when a roof of a nightclub collapsed overnight in the Dominican capital of Santo Domingo. According to local police, a provincial governor is among the dead. Police say at least 134 people were injured. And the South Korean military said it fired warning shots after 10 North Korean soldiers crossed the border today. South Korean officials say it was not a deliberate crossing. However, the motive behind the crossing remains unclear. Kelly?
All right, Bertha, thank you very much. Financials are the best performing sector today, and the XLF was on pace for its best day since early November. Earlier on, of course, we've lost some steam here. Shares of the big banks are also still 20% or more off their recent highs. Cities down nearly 30%. As macro concerns persist. And the first ever CNBC CEO Council poll, the majority of respondents see a recession before the end of this year. And those are usually optimistic. JPM raised its recession odds to 60% and then maybe even higher last week. My next guest is a CEO who's not yet in the recession camp. Joining me now is Ron Kruszewski. He is the chairman and CEO of Stifel. Ron, I've been looking forward to checking in with you, especially, I thought if you came on when we were down 1,000 with some concern. Then I thought, well, if you come on when we're positive, that would be, and now we're negative again. So it just goes to show these are crazy times.
Great to see you, Kelly. Yeah, it is kind of crazy times, but not really that unexpected, to be honest with you.
Really? You think so?
Well, look, at the beginning of the year, we had the lowest S&P forecast of any firm on the street. We were at 5,500. We said then that valuations were high and there was going to be turmoil in the market, primarily the threat of tariffs that we thought would be inflationary, tie the Fed's hands, and we just thought the market was priced to perfection then. Now, what has happened here has happened very fast, so much faster than we thought. But the basis that this was going to kind of happen, I mean, President Trump ran on this, so let's not lose sight of that. Furthermore, I would say, Kelly, that what is happening here is the first big step to a recalibration of trade policies that have gotten unfair to the United States. It's a huge step, but the president's transactional. He carpet bombs first and negotiates second. And that's what we're seeing. So you got to be a little careful not to think this is the new normal. This tariff situation is not the new normal.
I'm glad that you said that. I want to come back to that. But you guys have a lot of skin in the game as kind of a deal firm, advisory, investment banking, and so forth, where we've really seen a stall so far under his administration. So when you're kind of advising or positioning the firm, and when you say, look, you got to take them at their word, this is what they're doing, that could further injure business for the duration of the year, right?
I do. I mean, I think that this is not normal politics. Normal politics we'd have 10 state dinners to move the needle 1/100%. This is a much more in your face, we're going to get it done approach, and it's causing some short-term pain. But look, we were talking 2 months ago, Kelly, about the unsustainability of the U.S. twin deficits being trade and the budget deficits. Interest exceeds defense spending. A lot of these things need to be recalibrated, and this is just business approach in politics, and a lot of people aren't used to it.
So to put it a little bit more bluntly, maybe this is unfair, but if you kind of see what they're trying to do and understand how it could hurt business, I mean, would you go so far as you don't want your staff to sit around doing nothing, right?
We're busy. I mean, look, right now is the time that we need to be talking to investors. We cautioned investors at the beginning of the year that valuations were extended. We're telling investors now that it's a time to wade into stocks. A typical recession would take the S&P 500 to 4,400 from the high of what was 61, 40, or 50. So the market's telling you a 60% chance of recession. But I will tell you something, the upside from here now is where you would wade in. There are some great companies on sale in the United States right now.
So talk a little bit about that and how you're going to steer a financial firm through what could be a coming recession, whatever international business you had done. I don't know how that's being affected. And again, there are now a lot of reasons why people need to tap your brain power to figure out what to do in this environment. But this is going to be a reshaping of a year, it sounds like.
Well, it is, and I think that's, again, everyone's very nervous because politics doesn't normally work this way. I mean, look, politicians cajole. They cajole people, and it takes years to get some of this done. I've never described President Trump as a cajoler. He's again, transactional, and it's very difficult to do an M&A transaction or run a business if you're not sure what your cost of goods sold is. Think tariffs. If you don't know what it costs to put something together, that's hard. And second of all, we have a tax bill coming down the pike where it appears that every line item is up for discussion. So that uncertainty makes for a difficult environment. But I think it's short term, and I think that in the long run, it's a step towards making the United States stronger economically speaking. Our allies, our best allies, have overproduced and oversaved, and we have funded that through twin deficits, and that needs to be recalibrated.
But I just wonder what that looks like. I mean, some say that'll mean it's less of a financialization of the economy. It's a reindustrialization, and you're a financial firm.
hey, we're at the fulcrum of savers and investors, and so we're feeling the short-term uncertainty for sure. We're really adding value by helping investors understand where they should be allocating money in this market. And I feel that, frankly, Kelly, I feel that we called this right up to this point. We started the year cautious. I'm sitting here today saying it's an opportunity. Call me back on your show and tell me I was wrong. Okay, that's fine. But I think that longer term, what you're seeing here is an administration that wants to make some changes in what has been an 80-year world order of globalization is being recalibrated here. It's just being done a lot faster than most politicians would do. A lot faster.
Absolutely, and kudos to Barry, kudos to the rest of the team and everybody for trying to kind of help people now. And as you say, I think this is the time to start thinking about getting back in. Ron, really glad you could join us today. Thanks so much. Ron
You got it. Thank you, Kelly. Good to see you.
You too. Chairman and CEO of Stifel Financial. As we head to break, take a quick look at stocks. The Nasdaq is back in the green after erasing its 5% earlier gain and then turning briefly negative. The Russell.
Hey, what's up, Rich? How you doing, bro? Yeah, I headed back from San Antonio. Headed back from the Final Four. How you doing, Rich?
If you still have symptoms after trying Humira, Rinvoq works differently. Rinvoq is a once-daily pill from the makers of Humira that can rapidly relieve joint pain, stiffness, and swelling as fast as 2 weeks for some. And even at the 3-year mark, many people have felt this relief. Rinvoq can stop joint damage, and in PSA, can leave skin clear, almost clear.
Rinvoq can lower ability to fight infections. Before treatment, test for TB and do blood work. Serious infections, blood clots, some fatal. Cancers including lymphoma and skin. Serious allergic reactions, GI tears, death, heart attack, and stroke occurred. CV event risk increases in age 50 plus.
Love to know good my team won against your.
Hep B or C, smoked or pregnant. Don't take an allergic or have an infection.
Ask your rheumatologist.
Lost my parlay
for you.
And take back with yours.
My 5. Oh, you had the Gators winning? Yeah, that was a great game. We fumbled at the end. Yeah, that was a great game. All the games was good. All of them was close. All the games was close and nail biters. That's one thing about Florida. They always, all year, that's how they roll. They come back at the end. So I knew they was going to try to get a run. And that's exactly what happened. They got that run at the end of the game and held out. Great game. That's what they've been doing the whole year, though. They good at that. They stick together and they play all the way through. Especially at the end of the games, they don't make that many mistakes. We started making mistakes at the end of the game last night. It was so much excitement. I gotta rewatch it though. That's what I'm gonna do probably later. Rewatch the game and really pay attention to it. But when you at the game, there's so much excitement that you miss certain things that you catch if you watching it at home on TV. But that San Antonio is a great city. Great city over there, man. Yeah, I can't wait to go back and visit the Riverwalk again. I don't know if you see my vlog where I was strolling down the Riverwalk area. What a great city. Thanks. I seen a couple of live show reacting from home. Man. Yeah. But that San Antonio is a great. I might go back for Cinco de Mayo. San Diego is mostly a Spanish town, mostly Spanish. So I know Cinco de Mayo gonna be real. Yeah, it's gonna be real exciting out there for Cinco de Mayo. That's what I'm thinking about now. Maybe going back to San Antonio for Cinco de Mayo. And then the stuff there, the food and stuff, it's quite cheap. It's not expensive at all. I had a great time out there. I'm almost back in the city of Houston now. I got about 25 more minutes. Then I'll be back in the city. Shout out to University of Houston. Go Cougs. Shout out to University of Texas. Hook 'em Horns. What a great college season we had this year, guys. But guess what? We got baseball coming up. We got, as we get ready for the next football season. So we got baseball right now. So shout out to the University of Houston, Hook 'em Horns. Shout out to University of Texas. Shout out to Florida Gators, Auburn, Duke, all those great schools, guys. Shout out to those great universities. They represent their university really well. Top-notch schools, top-notch athletic programs. You can't go wrong if you go to any one of those universities, guys. You can't go wrong. Great education, great student base. Yeah, shout out to those schools. I got what I wanted, all 4 #1 seeds in this Final Four. Great games, great time. All of them was close. Great, yeah, I had a great time. The city was amazing. Everybody's out there friendly. Great time. Everybody that came rocking with me on these lives, on these vlogs I've been doing, I appreciate you.
Hurtling into the unknown, and the Dow is higher today. Right now it's up about 282. It's been in the green all day long, but it was up 1,500 points from its lows yesterday morning. The Nasdaq, the S&P are higher. They're well off the best levels of the day, and they briefly dipped negative. The high for the S&P today was 52.67. We're around 5,078. United Health is helping the Dow out today, nearly 200 points. points. It's contributing on its own nearly 6% as Medicare plans look at a bigger than expected increase in payments from the government. And it's not just health insurance. You can see, by the way, Humana CVS also up on that news. We also have P&C insurers seeing gains today, and that's helping make financials a top sector. Let's start with the markets. Today's early rebound has been nearly completely wiped out, but we're gyrating. Joining us now is Wilmington Trust Chief Investment Strategist Megan Shu and Barclays Head of U.S. Equity Strategy Vinu Krishna. Welcome to you both. Megan, what do you do here? What do you make of it? What's going on?
Yeah, this is tough. I mean, it's a tough market, highly volatile. I think the answer that maybe nobody wants to hear, because it's always tempting to want to do something, is that you kind of have to buckle up and go along for the ride. We have basically two very distinct paths we could take here. One that could result in significant negotiations and much lower barriers to trade.
Back in Houston now, guys. I'm back in Houston. You can tell because you drive a lot slower in Houston than what you do in any other of these cities that I go to. Speed limit is down to 60 miles per hour now. We're back. We're back in town. North Post Oak Road. We back. Now I'm gonna have to go through this Galleria area traffic. This Galleria area traffic is crucial. But we back, guys. Safe trip. Thank God for the safe trip there and back. God, thank God. Successful trip. About to exit right here.
Do look interesting right now, but it could be choppy at this point in time.
Yeah, you said, Megan, that you were neutral to equities, the base case, recession. What does that mean, neutral to equities? I would imagine your clients, our viewers, our listeners, just kind of wondering, what do I do now?
Yeah, well, neutral to equities means you're fully invested. So we are recommending that you stay fully invested. Our clients are diversified, so getting some benefit from, certainly not today, as you point out, the 10-year, but some benefit from defensive assets like fixed income and cash. I think that we're kind of caught in this middle ground. You posed a great question just now in terms of recession, and I don't think that we are priced for either a mild recession or a more severe recession, but I do think that it's a little bit too late to sell at this point, assuming your time horizon is about a year. We've looked at recessions that are not associated with the popping of a bubble, and the drawdown is anywhere from 20 to 30%, but you tend to see a recovery from that trough level in less than a year. So I think it's just about being patient here, and we don't see signs of a bubble, not in credit. Housing balance sheets are pretty good. Corporate balance sheets are in good shape, certainly not enough to withstand the magnitude of the tariffs that we've gotten. And then I also reject the idea that tech is a bubble. So I think that there is just a need to be really patient here as we wait to see if we are going to move into a recession, if it would be mild, and then hopefully recovering again in the typical time horizon.
Vinu, what do we do with kind of the wait and see on these headlines and the market's hopes that we're going to get some kind of rollback, or that the word negotiation when it comes from the White House means that the tariff rates are coming down, does it?
Yeah, so I don't think you can expect much.
This gallery area is not that bad right now. Good.
But I think
you gotta get past.
I do agree with maybe that you stay invested, but
West Time.
More than a month ago, we changed our stance.
Once I get past West Time, I'm good to go. Back in the city of Houston. Good to be back home.
The factor which is working really well right now is yield, which is really a combination of income and buybacks. I would say more specifically sustainable dividends. So you just have to do things in this market. On the tech side, though, what I would argue is that the de-rating has been so dramatic that I think you are approaching companies which have already hit the bottoms we saw in 22. I mean the big tech segment, which ultimately is still posting earnings number significantly higher than the rest of the market. And with the de-rating, I think you come to levels where you can start thinking about accumulating this portion of the market, recognizing that if you end up in a full-blown recessionary environment, then there is risk.
We had that big traffic in San Antonio.
But listen,
I'd have been home already.
Tech has come down from 31 times to
I think I left around 9:45.
We saw in the 2022 sell-off. So I do think that parts of the market are indeed pricing very sort of aggressive, down the pockets where there's better quality. So that's a better position.
Yeah, Megan, we traded on AI and big tech for 2 years, and that's all we heard about while the rest of the market lagged. I mean, the S&P 493 didn't move much, right? We talked about it almost every single day. 7 or 8 stocks drove everything. Now those stocks are down 20 to 50%, depending on which name
is it a wreck, bro?
You're looking at. Nothing has changed yet. The market is clearly pricing in some kind of derating.
Come on, let me pass up West Time.
Collapse in earnings.
There's no wreck. Once I get past West Time, I should be good.
Apple's going to cut its guidance. Amazon's going to cut its guidance. Because if it doesn't, I do wonder where the markets will go, because we're pricing it as if they will.
Yeah, I mean, this is a tricky time because valuations are not all that helpful. And it's, on the one hand, you look at the Magnificent Seven and we're back to valuations that are basically pre-ChatGPT, which looks interesting and exciting. But when you think about the exposure of some of these stocks to China, which, while we're getting a little bit of some support in the market from the idea of negotiations and traction, we're really not seeing that with China. That's going to be a harder battle to fight, and these tech companies do have a lot of supply chain exposure, especially any of the companies that are consumer-facing, consumer durable type of hardware companies. So I think that is, where we are. We're looking at maybe more. Flushed out and panicky. I think we got some signs of that on Monday, but I also think this is going to play out a little bit longer, and you don't need to rush right in. Of course, some of our clients do have cash on the sidelines and have been waiting for a better opportunity, and we came into the year pretty expensive on the market. So this is looking like a good opportunity to get some of that money to work. Tech looks interesting. Some of the other parts of the market that maybe are more beaten down, financials, those could be giving more attractive entry points as well.
All right. Thank you both today. We appreciate it. Megan Shu of Wilmington Trust and Vinu Krishna with Barclays.
All right. So why don't we stay in the market 10-year money? Because as bonds go, so go stocks. And you may not be paying as close of attention, but bonds, they've had huge move the last few days with a nearly 0.5% move in 10-year yields in just the last 24 hours. And folks, for bonds, that's a massive move. Let's talk more about this and more with Rick Santelli in Chicago. I think I was joking with our team that every time we said the word whipsaw yesterday, somebody had to put $1 in a jar so we could buy some beer later, whatever it is. But yesterday, honestly, bond yields, they moved around like a stock.
Absolutely. The stock market and interest rates are moving like commodities, like a corn market on a hot day in July, yes. And I don't see that dissipating anytime soon. Let's start at the beginning, shall we? Because today there's some big news on the yield curve. So as you look at 3-year note yields on top of 10-year, and I picked 3-year because we had the first of the auction series, 3s, 10s, and 30s. And the 3-year auction was poor in terms of demand. I gave it a D as in dog in terms of demand. And you could clearly see right at 1 o'clock Eastern how everything changed. As yields were moving down and sort of following stocks that went from green to much less green to red to back to green, we see that 10-year then turned around and started to lead. So short maturity, most closely tied to the Fed, was leading on rates on the way down. Then the huge reversal in the long end, you can clearly see it there. Open the chart up, and what you really want to look at is we had a key low in September. And since then, once we crossed over 4%, we're holding there. Debt deficits and tariffs, curve steepening. We're over 50 basis points in 2s to 10s, the steepest it's been in over 3 years. Real quickly, here's the official yuan currency. Right now, the dollar is the strongest since SEP of 23. But if you look at the offshore, which goes back on that chart to 2010, it's the strongest dollar, the weakest yuan ever for offshore. You want to monitor that. They're an export economy, they're getting tariffed, and they have a whole country full of things they need to export. We want to see where they go next. Kelly, back to you.
Absolutely, Rick. Hugely important. We'll keep an eye on it. 740 is the latest level there, Rick. Thanks, Rick Santelli.
All right.
Lots more to come, but first, some big moves in healthcare stocks. President Trump giving Medicare a big surprise. Details next.
All right, down to the wire. Thank God for a safe trip. On the way back, safe trip. On the way there was safe. Thank God for a safe trip. I'm gonna rest a little bit before I go start my training. I gotta go run, and I gotta hit the weights. I'm still training for that marathon. So I'm just here long enough to rest and get back at it. Get back to work. Back to training for this marathon, guys. So I will be doing the walk down later. It's 1:15 right now. So I think I'm gonna rest for about an hour and a half. And I'm gonna go on out there, run them 4 miles, do that walk down. You know, I go live doing the walk down, so I will be back live after I run that 4 miles. So had a great weekend. Hope you caught the vlog. If you did, I appreciate you. If you didn't, go back and watch the videos. I vlogged a little bit while I was out there in San Antonio. Great content I put out. Like every time I go these places, I always bring the best, try to bring some pretty good content, right? The Super Bowl content was pretty good. If you didn't see the Super Bowl when I went to the Super Bowl, go back and watch that. But all these places, San Antonio is they moved up into first place. Well, second place. Vegas is first place. So, with that being said, guys, hope y'all having a great day. I'm having a great day so far. So far, so good. So, with that being said, 704 Wall Street is my block. 704 Wall Street is my block. Earn, spend less, and invest. I love and I appreciate y'all. To the next one. It's the one and only Stock Sniper. I'm out. I appreciate y'all for riding with me on this on these trips. I appreciate y'all for riding with me. keeping me company, commenting in the chat. You know what I'm saying? I love and I appreciate y'all. With that being said, I'm out.